The last month after we launched our beta, I've been trading more than I've ever traded in terms of just activity. And I think it's reflective of that like process being lubricated by AI, because it's just so simple for me to just say, hey, act on this now.
Hey everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Thanks for joining this live stream. Before we get started, a quick reminder, nothing you hear on Unchained is investment advice. This show is for informational and entertainment purposes only, and my guests and I may hold assets discussed in the show. For more disclosures, visit unchainedcrypto.com. Before we start, I wanted to introduce you all to our sponsor, Walrus, a project we actually use here at Unchained for data storage. Throughout the episode, you'll hear short excerpts from Rebecca Simons, managing executive at the Walrus Foundation. We'll start with this clip on why Walrus is good for large data files.
If you look at most apps today, they depend on quite a complex mesh of different infrastructure, a lot of which is centralized. Walrus is a decentralized data platform. It's particularly good with large, unstructured data files, and it allows you to store and use those without dependency on any centralized systems. It works really well as part of the SWE stack. It was created by Miston Labs, who are also the originators of that SWE stack. And what that means is natively together, they allow developers to build with trust, ownership, privacy baked in right from the beginning. And what this does is it allows you to build use cases that monetize data in ways that just have not been possible before. So there are whole new revenue streams that are now available to builders to come and build on Walrus.
Today's guest is Alex Svanevik, co-founder and CEO at Nansen. Welcome, Alex.
Thank you, Laura. Good to be here. I'm a big fan of your work.
Yeah, nice to chat with you. I'm just realizing I don't think I've ever had you on the show, which is crazy. But we have a really great opportunity to chat with you, which is that Nansen has big news coming out today. You're launching a new AI trading agent. Explain what it does.
Yes. Yeah. So some people might know Nansen for the work we've done over the years on on-chain analytics. So basically, a lot of investors and traders use our product to discover tokens, perform due diligence on them. But then at the end of the day, they historically have gone to another product to actually execute the trade. And so what we've done is that we've basically taken this function in-house, which means that you can do your whole on-chain investing and trading within the same product. Discovery, research, and then ultimately execution in one product. And the thing that's kind of unique is that we offer an agentic way to do this. So, we thought, what does investing look like in 2030? And instead of trying to build kind of yet another trading product that looks like all the other ones, you can basically talk to Nansen and you can say, hey, I want to know what smart money is doing. You can get, the tokens that they've been buying over the last hour or 24 hours or any time frame you want, because all the data is in real time. And then you can say, hey, this number 2 on that list looks interesting. Why don't we put, $100 into that? And then the agent, literally based on what you said, goes out, checks multiple DEX aggregators and gives you the best price. And then you can tap execute and the execution happens on chain. So it's a pretty magical user experience, in my humble opinion. And the thinking is that we're basically creating a new way to trade that's agentic, on-chain, and integrated in one product.
Amazing. So give me kind of the range of things that we could ask it to do.
Oh yeah, that's a good question. So in the beginning, we're trying to focus on kind of the co-pilot user experience, where you basically just use it as almost either a co-pilot or a concierge to execute the trade. But over time, you're going to be able to do more interesting things like prompting a strategy, or asking it to rebalance your portfolio. Actually, it can kind of do that now. I was demoing it last night at an event to someone, where I said, hey, just rebalance my portfolio, like pretty open-ended. It doesn't really know how to rebalance it. It gave me like 5 different options. And then I said, okay, number 2 looks good, which was to sell off some of the smaller positions I had. And it basically triggered 5 different transactions for me. And then I just manually clicked execute on each one of them, which basically streamlines the whole process. So that's what you can do today. We're trying to keep it relatively simple in the beginning, because you want to make sure that the agent doesn't hallucinate. It has really great execution. It doesn't get confused. So that's why we want to really nail that first use case, where you just ask it to do kind of simple transactions. You can do a little bit more than that, but the thinking is to kind of open Pandora's box and start trading through the agent rather than kind of a conventional graphical user interface.
Okay, yeah. I mean, what's interesting is, in a lot of wallets, there will be a sort of aggregator aspect, and it'll show like it's giving you the best rate or, whatever. But, like a lot of people understand, oh, actually, but if I use this other website, I can access the wallet, but use a different interface and get an even better rate. So it's almost like you're using this AI agent to just do something that like you would do manually.
Yeah, so this is a really good point, actually, because I think a lot of people will basically assume, oh, Nansen is charging some massive fee on top of, what you would otherwise get if you went straight to something like Jupiter or whatnot. But what we're doing is actually charging you the same or even lower fees. And so it's basically 10 basis points if you're a pro subscriber, which is super low, 0.1% in fees, or 25 basis points if you are a free user. And so this has been in beta now for pro users for about a month. And now it's launching for free users, which means you're paying 25 basis points. And if you compare that with centralized exchanges, or you compare it with other DEX products, it's either the same or better. In other words, we're actually not marking up at all the price that you'd get through the aggregator. So the thinking is, like, if you're already using Nansen to discover what you should do, we just want to make it really convenient for you to do it right in our interface. And if we had a big fee on top of it, that would basically maybe drive you to go somewhere else to do it instead. But the thinking is, let's just have the same or even lower fees right in our user interface. So yeah, our users, by the way, are probably a little bit more sophisticated than the average investor, because we, of course, have a lot of data and analytics. And so people who use our product tend to kind of want to dig a little bit deeper. And so I don't think they would accept, actually, if we had kind of a 95 basis point fee or something crazy like that, which actually, by the way, a lot of other products do charge people, even if you might not be aware. So yeah, that's kind of the thinking, that you get the best price and you also get super low fees, which means why wouldn't you just execute the transaction in our product?
And so it sounds like originally the thinking is this will be used for DeFi. And then there's this manual component where you're kind of approving what it does. But what's your vision for kind of like the next level, type of activity? And frankly, just hearing AI agent to me was like, eventually it'll get to the point where AI agents are transacting with each other. But yeah, right. I don't know. Just tell me kind of what you think the evolution of the product will be.
Yeah, totally. By the way, so in addition to the agentic way to trade, you can also trade through a more conventional kind of trading terminal UI on web. So I think we acknowledge that a lot of people will still prefer to trade the old way, but over time, more and more people are going to get comfortable trading the new way. And so I think it's similar with like ChatGPT, for example. Although it was so incredibly powerful when it launched, it took a while for people to get used to the thought that you can actually do a lot through a chat UI, right? And I think at this point, if you use something like Claude Code, you're kind of amazed, at least I am, like regularly, literally every day, on how much it can do. So I think it's somewhat similar with trading, except we haven't been used to trading that way. And so I think we first have to just like crack that open and get people to get used to the idea that you can just log in and send a message to your agent, and the agent just does what you want. And so for me, like as a user of our own product, this has been pretty interesting to get used to that behavioral loop, where now for me, the most natural thing is to go into our mobile app, send a message to the agent, and it does what I want. Like, hey, sell all the meme coins I have in my portfolio. And it just like does that for me. And so I think that's where it starts. But I think the longer term vision, to your point, is basically that a lot of agents can do things autonomously, right? And then there's kind of a way to get there. I think humans will always want to be in the loop to some extent, although there might be different, personas. I think some people actually enjoy trading from an entertainment point of view, and they will not want to be taken out of the loop. So the kind of Copilot user experience is really good for them. Other people, frankly, are like, look, I don't care, what this thing does. I just want to put in some money, and then I expect that it sort of manages the money. I say managing in a loose sense. And so maybe this is where like you probably have friends and family over the years who have been like, hey, I want to put some money into crypto. What should I buy, right? And so for now, most people, and I have a lot of friends and family in that category, most people would just say like, hey, just buy Bitcoin, or just don't buy anything, because you're likely going to buy the wrong thing or whatnot. But most people don't want to manage money on behalf of their friends. So there is clearly like a need for more passive investment that is also maybe more than just buying Bitcoin. And so I think agents could play an interesting role in that sense, where you, just like you would talk to a friend who has like infinite patience and is glued to the screen 24/7, you might want to express, hey, this is what I want. Like this is sort of the guardrails of what I want, and this is what I expect. Just like you would talk to, again, ChatGPT, Grok, Claude, and so on to solve other problems. And then you kind of expect that it does stuff under the hood. So my view is like it'll be kind of I think we'll take steps towards that vision. Number one, like it's not going to automatically switch overnight where everyone just says these agents are going to trade autonomously. But I think also number two, these user experiences that we'll get, I think this year, will maybe be more appealing to other people than the people who are trading in crypto today. So if you're super deep in the trenches and you are, buying meme coins left and right, and you're glued to the screen, maybe like a different user persona will find more value in an agentic user interface. So yeah, it's a super interesting area, and we're kind of figuring this out as we go. And like, because all of the stuff that's happening in AI, it feels like the world is changing literally like at least every week, if not every day. But yeah, the overall, it's kind of like going from Copilot to like autonomous self-driving, and then there's kind of a big space in between those two things, and lots of different variations that are going to be appealing to lots of different user personas.
And so Nansen itself covers many chains, and I was wondering, does this agent work on all the chains you guys cover, or is it only EVM chains? Or explain that part.
Yeah, for now it's Solana and Base, but it will launch pretty much all the chains that where users expect to trade. So we're going to roll them out gradually, because it's kind of, think of it like this: like before you switch on a chain, you need to make sure that you have everything lined up. Like everything needs to be super reliable in terms of the information, the data. You need to make sure that you have super high swap success rate, that like every transaction that the user tries to make actually lands. And there are a lot of moving parts there. So we'll basically gradually be adding more chains to it. And it's kind of funny, because the agent almost creates what you can think of as like chain abstraction, right? Because if you just tell the agent what you want to do, and the agent knows where you have funds, like which portfolio, and it can bridge, it can just take care of stuff for you under the hood instead of this, like, frankly, terrible user experience, which I think I should have mentioned early on. We should acknowledge that the user experience of trading on chain is pretty garbage, right? That is kind of the nature of early stage crypto, if we can call it that. Like, the infrastructure hasn't really been there. We don't have that many products. People often build only for degens. And so, we're used to a bad user experience, hence the bar has been pretty low. And so what we're trying to do is to raise the bar on the user experience, which means that a lot of the stuff that's typically annoying with on-chain trading just goes away because you abstracted the chain, or because you don't have to go to a separate app to sign, like a different wallet app, or you'd have to have like 17 different tabs open just to like monitor the information, whether it's on chain or X or whatever. So a lot of these problems go away because we've tried to build a really integrated user experience where you just literally download the mobile app and you can start talking to the agent, and it guides you through the process. You send in, $10 to test it out, and now you have an agent that you can just talk to and trade with. So yeah, the user experience is pretty terrible in crypto, right? And we have a long way to go there. But now I think the infrastructure is good enough to build really world-class products and user experiences. So that's at least what we're trying to do.
All right. So in a moment, we're going to learn more about the types of customers that will use it and how this could impact the market structure of crypto. But first, we'll take another quick word from Rebecca Simons, Managing Executive at the Walrus Foundation, on why Walrus works for devs.
Before we built Walrus, what we heard a lot from developers was the need for speed, and we had it ourselves. So reads and writes are extremely fast on Walrus, and this means that apps don't lag even with really large files. Privacy was another thing that we heard a lot about, and Walrus lets developers encrypt data with our primitive called Seal. And with that, you have full control over who accesses your data, and everything is enforced on chain. And this enables these really incredible use cases that haven't been possible before. Everything from more reliable AI models to data markets where users can monetize their data. So if you put this all together, what this actually means is the developers can finally build apps and they feel Web 2 fast, but you've got Web 3 level guarantees.
So, you kind of talked a little bit before about how you thought your users were more sophisticated. And I wondered if you could kind of elaborate on, are they kind of institutional traders, or, what types of activity do you see with your products, and what types of activity do you expect with this product?
Yeah, I always found it funny because many people think that Nansen is kind of an institutional product first and foremost, but actually most of our users are on-chain investors who are individuals and they're in the trenches. And so typically, so the way I would think of it is kind of, on the one hand, you have sort of normies who just bought Bitcoin on Coinbase for the first time ever. That's not typically our core persona. And on the other hand, you have extremely kind of advanced, let's say, market makers funds who require everything to be programmatic and so on and so forth. We do have some of them using, actually a lot of them use our APIs. But I think the core user we've always focused on is kind of the degen, the individual investor who feels that they can have an edge in crypto because, frankly, they can. Crypto is super fragmented and there's a lot of information inefficiencies. And they tend to kind of look at new narratives and try to figure out what's actually, the best way to play this latest narrative, or to manage, their overall more long-term on-chain portfolio. But people who trade on-chain very actively is kind of the core user persona, and most people refer to them as degens. That is basically like the core user persona we've always catered to at Nansen. I can also just say, for those people who aren't familiar with Nansen, the way we got started was that we launched our product April 2020, right before something called DeFi Summer. And so DeFi Summer was an amazing time, probably not for our physical health because we were stuck inside due to COVID and doing all sorts of crazy things on chain. But there was like a very clear need to figure out what people are doing on chain because there were so many opportunities all the time, and you had to navigate, what the quote unquote smart money was doing on chain. At the time, smart money meant funds like Alameda and 3 Arrows Capital, which turned out to not be so smart after all. But at least a lot of people wanted to figure out what are these funds doing on chain, and we basically label addresses. That is one of our core strengths. So we have like 500 million addresses labeled, which is done mostly, algorithmically and through AI agents actually, and some human curation as well. But so you can figure out what smart money is doing. That was like the inception of the company and how we got started. And so we've sort of evolved that approach, but the core thing has always been the same, which is that we want to surface the signal and create winners. That's the mission of the company. And in a way, even if crypto changes, that part has always been true. That's kind of an evergreen truth of the company, that there are opportunities on chain if you're smart and if you look at the right things and if you actually make use of the information of what's happening on chain, you can have an edge. Like that's the whole kind of founding premise of the company. So that's why we've always been used a lot by the degens.
All right. Well, so I'm glad that you dipped into Nansen history because, we have not had that information on the show. I'm also curious about your history. How did you get into crypto and come to found Nansen?
Yeah. So my own background is actually in AI. I have a master's degree in AI from University of Edinburgh back in 2010, so 15 years ago, which means I like to say that I was in AI before it was cool. And it's true. And I can prove it. But yeah, so I worked as a data scientist actually for many years, and I worked with machine learning. I trained models. Funnily enough, one of my teammates back in 2016 was Mats, who is the CTO at Dune Analytics, and so we worked together. Yeah, he's a great guy, and they've done super well over the years, which I'm very happy about. And so I was a data scientist for many years. I was a data science manager. I worked as a management consultant, even like in industries like insurance and salmon farming and media and lots of different industries. And then in 2017, I discovered Ethereum. Some engineers at our company in Barcelona at the time basically taught me about Ethereum, and I got very curious on it because I had ignored Bitcoin for many years before that, which is not great in hindsight. But I was kind of thinking, as most other boomers, that Bitcoin was for money laundering and nothing else. And then a few years later, I discovered Ethereum, and I thought, this is interesting for two reasons. Firstly, I like that it's a platform, because that means people can create things on the platform. And if any of those things become popular, probably the platform is going to accrue some kind of value. That's number one. Number two is that with Bitcoin, I always felt that I don't know if this is the currency that's going to take off. Even if the thesis is correct, you don't know if that's the right currency, the right implementation of it, or whatever, the right monetary policy and all that stuff. So I thought if someone does figure that out, there's a good chance they will build that currency on Ethereum. So I think a lot of people had sort of similar thoughts on Ethereum, and maybe add to that this was right at the ICO boom, which created also a lot of opportunities to invest and make money pretty fast and also lose money pretty fast. So I kind of dove right into that. I moved to Hong Kong in early 2018. I joined actually another startup that had done an ICO. That startup imploded very quickly because the price of ETH tanked from $1,400 to $80 in 2018. And after that, I realized that the core thing to focus on was on-chain data and on-chain analytics. And so I took some of the best people from that company and co-founded Nansen, started building it late 2019. And then we went to market.
Can I ask which ICO that was?
Yeah, it was called CoinFi. It was kind of one
okay.
of a million ICOs, and
Okay.
never went anywhere. But I will say, like, some of the, I think, like, there was a premise of kind of trying to build a great information tool for crypto, but the vision wasn't very clear. And so, as an employee and not a co-founder at that company, I tried to speak up and say, hey, this is what we should do. It wasn't well received. So I thought, well, I'll just start my own company and then do these things myself. And it turned out that maybe I was right.
So we touched a little bit on some of this before, but I wanted to tease out more of this information about your new AI agent product. By the way, does it have a name?
Yeah, so the mobile app is just Nansen AI. And so that's pretty straightforward. And on the web, where it's launching very, very soon, it's the same AI agent, which means it has the same capabilities. But for now, it is just integrated into our web product, which you can find at Nansen.ai. So it doesn't have a separate name as such. It's kind of evolving our core product to become AI first.
Okay.
Yeah.
Okay. So, what this type of product does is it gives retail users access to or at least similar types of automated decision-making systems that hedge funds have. And I wondered how you thought that would impact market structure.
That's a great question. And yeah, I do think this is kind of giving retail investors an Iron Man suit, which is kind of the ambition, right? Or a Batmobile, choose your metaphor. But I do think it's interesting because my view is that the benefits of AI are going to accrue to individual investors more. And so if I'm going to unpack that a little bit, I would say, if you think of a hedge fund that is very well resourced, they have, PhDs, analysts, traders, all these different types of profiles, and they've invested a lot in their infrastructure. But the cost to recreate or even create new infrastructure and products, tools that are equally good or even better has basically collapsed with AI. And so my view is actually that the greatest improvement will be for individual investors. And so that's pretty interesting. And it is a really good question on, like, how it impacts market structure. I think the good thing about crypto is that crypto is so fragmented that this has always been kind of my thesis about crypto, is that there's so much stuff happening in crypto and it's so fragmented that everyone can have alpha in their little corner. And so, you and I might have the same tools, but we can use those tools very differently, and we can focus the tools on very different portions of the market. And so what I think seems pretty obvious is that just activity is going to go up. Like, if you can more easily do things on chain, which is not just because of AI, but also because the infrastructure is so great, because you have Solana that has super low fees, super low latency. You have like Privy, dynamic turnkey, which gives you great like embedded wallet technology. You have, aggregators like Li-Fi, OKX, DEX, and Jupiter that give you great like best price execution. Like, all this infrastructure is now there. And then you add on top of that AI to help you, discover and research and ultimately also execute trades. It just seems to me that, that is an incredible setup for individual investors, and it's going to make them trade even more. And so I think, like, seems pretty obvious that activity is going to go up. It's a little bit like vibe coding, right? Where, more people are going to code because of vibe coding, because you have like lowered the threshold for people to code stuff. And so I think vibe trading, which is one way to think about agentic trading, which is what we offer, also kind of lowers the threshold to like who can trade. And then it's really important, by the way, that the tools you give them actually are good, right? Because if you lower the threshold and you give someone it's kind of like, have you seen the meme with giving like Claude Code for marketers is like someone handing an Uzi to a chimp? that's one potential way to think about this, right? Which could be very dangerous, right? And like you need to make sure that the quality is great. And to be honest, because we operate in the agentic trading category, I've looked at other products, and like I'm not going to mention any names, but there's a lot of slop out there, and I think a lot of people, frankly, are going to lose money because they're going to use tools that are half-baked, that don't really work, and they kind of look good, but under the hood the agent is like hallucinating, has the wrong data, it picks the wrong token if you want to execute it. Like there's all sorts of things that can go wrong. So I think how it impacts market structure, I think it's going to increase just activity. Like it makes it possible for more people to trade, number one, and number two, it lubricates the whole trading process, which means like the people who do trade are going to trade more. Like, for example, I actually don't trade that much. I think of myself more as maybe operating the equivalent of like a liquid token sort of venture fund, kind of Defiance Capital, run by Arthur, is a friend of mine, and that kind of style where you don't necessarily trade super frequently, but you have like a bet and you want to see that bet play out. Could take months, could take years, whatever. But in the last month after we launched our beta, I've been trading more than I've ever traded in terms of just activity. And I think it's reflective of that like process being lubricated by AI, because it's just so simple for me to just say, hey, act on this now. And I don't have to be like, oh, let me open this page up, go in there, click on that tab. Now I have to sign with my other wallet. Oh no, I don't have this wallet on my device. Oh, I have to scan this QR code. It's super clunky, right? And if you just have an incredibly lubricated process, a lot of which is done by AI, then I think people are just going to trade more. So that's kind of, and then I think, you can then work backwards from like which assets are compelling to individual investors. Those assets are not the same necessarily as like institutional investors. For example, meme coins and creator coins and and even NFTs are typical kind of individual investor types of asset classes, if you can call them that. So, and then tokenized stocks too, I think is one of the most obvious bets ever, that of course people are going to trade stocks on chain if and that's a big if, the user experience is better than trading it on the venues where you would trade stocks normally, which I think it will be. And you might argue it's better already now, but like it definitely will be very soon. And then you have like prediction markets as well, which appeal to individual investors and retail investors. And so all of these things are just going to have more and more activity, is my view, over the next years. And so, that's kind of, and then you're going to have like the cool thing about crypto, going back to the part about fragmentation, is that you have this long tail of assets. And because you have so many market participants, because we've lowered the threshold, you're going to see you're going to see like a jungle, like a Cambrian explosion of all sorts of different tokens, which you could argue you've already seen to some extent. I saw a funny tweet by CoinGecko the other day, which was like the number of failed tokens per year.
Yeah.
And it's gone exponential, which kind of shows that, failed tokens have product market fit. Anyway, so I think like those are some high level thoughts on how it impacts market structure. I think it's worth thinking through these things from first principles, because like we're in a new world now, and you might have to re-underwrite a lot of your mental models like in the next weeks and months, partially because of AI.
Yeah, and you alluded to this. So out of curiosity, you're starting on Base and Solana, but eventually will this product also work on the various perp dexes? Hyperliquid's a really popular one, and on prediction markets, which is another hot area.
The short answer is yes. Like our vision is to allow people to trade everything on chain with AI. And when I say everything, I mean everything. So if people want to trade on prediction markets, if people want to trade on perps, and if they want to trade meme coins, NFTs, we will let them trade that. Now, there are some regulatory concerns you have to keep in mind as well. And so we have to navigate that. But that is the overall guiding principle, that every asset will be tokenized, which means billions of people are going to become owners, and chains are going to become the new financial fabric of the world. And so this opportunity we have in front of us, which is to allow for people to trade everything on chain with AI, is, like, in my opinion, one of the biggest opportunities in technology history ever. And so, yeah, we're going to support every chain that users want. We're going to support every asset that people want to trade. And our ambition is to be their preferred on-chain trading venue.
Yeah, what you said about how you expect this will just create so much more trading activity. For me, because I don't trade very much, I was like, oh yeah, hell yeah, I would use it. And the other thing that was funny is, you were talking about your history, like 2017 and stuff. And I wrote this article, I think it was in 2017, where there was this guy who was trading on Kraken, and I think it was futures or something. I don't remember exactly, but point is that he turned $10,000 into $7 million riding that whole initial ICO wave, like the early part of it, up until I think it was like May or June of that year, with the token summit that William Mugayar put on in New York. And that like caused like a top in the price of ETH. And the way he did it was, he kind of didn't really leave his home very much. Like, he might leave it occasionally, but he would like just wake up and be glued to his screens. And he kind of had this whole system going, but he had to physically be there to execute all the trades.
Right.
And so, I just, while you were describing all that, I remembered that guy. And he said, oh, I literally would just run to the store and get a sandwich. But otherwise, I just was in my bedroom for, 7 months straight or whatever. And
By the way,
I was like, well, I could spin up, my little Nansen AI trading bot and have it do that for me without having to be a hermit.
I mean, by the way, I have a lot of those stories. Like, there was a girl in Mexico who said, I think it was her and her friend, started with $500 and they grew that portfolio to $2 million trading meme coins with Nansen. So again, just to be extremely clear, I don't think most people should expect to be able to pull that off, right? And you can also lose all your money when you trade crypto, just to be extremely clear. But you do have those stories. And I think one thing that's interesting that you said there is, like, he was glued to a screen. I actually think one of the biggest opportunities, not just for crypto, but for like software in general, is to liberate people from their screens. And we talk a lot about a new way to trade. I also think there's kind of another related concept, which is a new way to work. Because we've kind of grown up in a world where you have to sit in front of your screen to do work, to trade, to invest, whatever it is. But I'm pretty excited about the vision of being like outside walking and talking with my AirPods on to my agents, and then they do stuff for me. And then when I come back and I sit down in front of the screen, like, the work is already done or it's in progress and I can monitor it. Like, being on my bicycle and giving instructions to my agent to execute certain trades, that's compelling. Like, I don't get super excited about the idea of like getting our users to be glued to their screens. But I get really excited about the idea that they can be outside in the real world, touching grass, but then also feel like they're taking action on their portfolio and, not having FOMO, which, by the way, is like literally the primary emotion in crypto is FOMO. And for those of you who were around in DeFi summer, you know that feeling. And actually, I feel a similar FOMO now about Claude Code. Like, every time I'm away from my screen, I'm like, I should really be using Claude Code to build stuff. That's kind of, I have a very similar feeling as DeFi summer 2020. But the point is, like, I think there's an opportunity to create new ways of doing things, whether it's work, or trading and investing. And I'm super bullish on voice as a user interface. I think it's like the most obvious opportunity, actually, but it's super underutilized and underappreciated. You see it in science fiction movies where people like talk to, the screen and whatnot, and the screen updates in real time. Have you seen the original Blade Runner?
No.
So there's a scene where the protagonist, Rick Deckard, is in his home, and he's just talking to his screen and scrutinizing a photo. He's like, zoom out, pan in, go to the left, go to the right. And this user experience of voice and visuals, I think, is super compelling. And we're going to work really hard to try to create that kind of user experience where you can talk to Nansen with voice, and also where you get visual artifacts created on the fly that are just perfect for whatever the question you asked is. And so, yeah, there's a lot of, we're going to see a lot of super cool things in the next, I was going to say years, but maybe even months, in terms of how you deal with software, how you deal with markets, how you deal with information, how you work. And yeah, so I think some people are scared of AI and they're negative about it, and they're like, it's going to take all our jobs. I think there's another, glass half full version of that, which is going to be that it'll help us create way cooler ways of doing things. And, we should lean into those opportunities and try to make sure that those actually manifest.
Yeah. I love what you said about voice, because I also think it's way faster than typing. The only thing is, of course, you have to be in a private, room for people to not hear you. All right. So in a moment, we're going to talk a little bit about security, but first we're going to hear a little bit more about Walrus's big partners, which one of them, by the way, is Coca-Cola.
Alchemy is one of Walrus's many great partners. They're an advertising platform. Every click and impression is recorded on chain. They're live. They've got great clients. Coca-Cola is one of them. They're already processing more than 25 million ad impressions a day. And by building on Sui and Walrus, Alchemy's clients get two really big advantages. So the first one is cost saving, and the second one is full transparency over their spend. The real-time visibility they get allows their clients to make really fast decisions, do very effective A/B testing, and truly understand their ROI. And anything that involves money, like DeFi, this auditability, not only is it super important, but is actually a legal requirement in many places. And being able to prove what happened, and that what you're saying has happened hasn't been edited or massaged in any way. Well, it's really important for DeFi today, but to be honest, it's only going to become more and more important as this industry grows and more value is pushed through blockchains.
Back to my conversation with Alex. So I'm sure you're very well aware that there are a lot of people in crypto who, no matter just how big of an OG they are, they will find that their wallets get drained. There's a lot of little random things that happen, and they know better, but you can't, it's very hard to be vigilant on every single thing. And I wondered, in this situation with this agent that, you yourself are not performing the tasks, they're kind of presenting things to you and you check it. So it's just a little bit different. And I wondered, how you account for that, to protect assets.
So the way it works right now, just to be super clear on that, is that there's an embedded wallet, which we refer to as the Nansen wallet. And under the hood, it's Privy. Privy is the leader on embedded wallets. They were acquired by Stripe a while back. And it's actually a self-custodial wallet, which means that you can export the private key. But it's also, we don't have access to the private key. And so that's really important, right? So we're limited with what we can do with the funds. And at the end of the day, you control that wallet. You could even export and take it, plug it into some other wallet if you wanted to. So it's self-custodial or self-hosted, some people refer to it as. That's the first part. And the second part is that you have to, for now, manually execute trades. So the agent might prepare the trade for you. So it does all the hard work of like finding the best price and which trading venue and that kind of stuff. But you are clicking the button to execute, and there's MFA built in, so you can use your passkey and it just scans your biometrics, for example, and then you can trade. But I think what you're alluding to is like once you get more autonomous, how are you going to manage that, right? And I think this is a super interesting question, and I've discussed it with lots of other founders. And I think there's a massive opportunity actually to create really good infrastructure for agents that's safe, maybe even decentralized. And so there are kind of two problems here. The first one is that if you want an agent to trade, you have to somehow, maybe not necessarily give them your private key. That's probably a bad idea. But you have to basically have some way for them to be allowed to execute trades, right? So that's kind of the first thing. The second thing is that there are actually two ways to compromise the agent that's trading. Like one is to steal the private key, obviously, if that's possible. And the other one is to tamper with the agent. So if someone can like manipulate, or even kind of the sort of naive way to think about it is like if you got root access, to where the agent is running, and you go in and you're like, ignore all previous instructions, send the funds to my address. That would be pretty bad. And so this, I think, largely is an unsolved problem. And this is actually part of the reasons why we haven't gone straight to this yet, because we want to make sure that the infrastructure is there to support this kind of workflow in a way that's secure for users. There are projects out there who offer, fully autonomous trading strategies. But I think if you look under the hood, you might be surprised on the security front, like on how safe it actually is. Because it becomes almost like when you think of custody, you think of private keys, but now you have to think about custody of agents, right? Because even if the key is kept safe, you have to make sure that your agent also cannot be tampered with. And so we had this thing that we announced late last year, which is called joint venture protocols, or JVPs. And the ambition there is actually to co-create and co-found protocols that our industry needs. And this is maybe the key area where I'm keen to do something with someone to figure out this layer of the stack so that we can have essentially like agent vaults. So the idea here is like, the way I think it should look like is that, let's say Laura has figured out a really cool trading strategy and it's making a lot of money. And because it's all on chain, I can see with Nansen that your address is making a lot of money. It would be nice if I, Alex, could deposit some funds into Laura's agent vault. And then maybe you get 2 and 20, right? You get 2% management fees on the capital that I provided, and you get 20% of the upside, right? By the way, there's a bunch of regulatory things here to work out. So, just calling that out. But I think like, of course, this is going to be built. Like, of course, people are going to want this. There are people who are good at creating trading strategies. They don't have infinite capital. They would possibly benefit if there's more capital being added to their agent vault, and they should be compensated through fees for that somehow. So basically, like, I guess if anyone is listening to this podcast and they have either are building this or have thoughts on how to build this, I'd be super keen on doing a joint venture protocol with them to solve this problem, because we are not going to move into this before, let me put it differently. We're not going to launch this if we don't think it's safe for end users, or if there's security issues where someone could compromise your agent, right? So I think that's one part. Maybe a totally different angle is that the other way to do this is to run stuff locally. And you could have like a Nansen agent kit that you like pull from GitHub, and now you just have your key on your own computer and your agent on your own computer. Now it's up to you to make sure that you keep that safe and no one like logs into your computer and messes with the agent. But in theory, that's like another way to do this. That's also quite compelling. So anyway, I think that the punchline is like, this is largely unsolved. And if someone has solved it, please reach out to me. I'd love to talk to you. But we are starting with the workflow where the user is actually in the loop because of these challenges. And so you have to actually pull the trigger. You have to click execute, get the biometrics to execute trades for now.
And earlier you mentioned something about how there are some AI agents on the market that you don't think are, super high quality. And I wondered if you had any tips for how people should evaluate AI agent products, and then if you had tips on how they should prompt them.
That's a great question. So firstly, we run our own evals and benchmarks of our own agent in-house. And you should expect that anyone who gives you a similar product does the same. So it might be worth asking them, and we're going to start publishing our own benchmarks on how well the agent does on certain tasks. How much does it hallucinate, or like how much do you manage to prevent it from hallucinating? How well does it format its answers? How good is it at using various tools it has access to? And a bunch of other things. How good is it at understanding trading intent? Like, does it understand your instruction and map it to the right type of transaction action? So that's one thing. Like, it might be worth reaching out and like asking people, how does your agent do and how do you evaluate it? And I think the other part that you can do maybe more quickly is literally just to poke around with the agent and ask it stuff. Right. And of course, I think it's a good idea when you test out these products, if they do have trading capabilities, to like start with a small amount of money. Like, do not put your life savings into these products immediately. And by the way, that's like, this is the same thing for our product. Like, you should not do that. You should play around with them, test them, get a feel for them. And these agents, they're also not perfect. Even if you get the best product out there, it's never going to be perfect, and it's definitely not perfect today. And so you kind of need to figure out the strengths and weaknesses of it. So like, how do you prompt it? Well, you can ask it stuff that you would expect it to know. So, even like basic things like, hey, what's in my portfolio? And like, tell me about my own transaction history. I actually like to do some more fun things like, hey, what's my on-chain personality based on what you see in my wallet? And then you can see if it kind of gets it right and if it has good judgment. So that's more an entertaining way to do it. Or like, hey, if you had to assign my trading style to a zodiac sign, like which one would it be and why? And so you can like have some fun with them, right? But yeah, so, and then I think you should obviously try the trading experience, like make a trade, like buy something, a small amount of money, maybe sell it again, make sure that everything works well on that front. I've tried a few products where like even that didn't work, and seemingly my money disappeared, and I was able to retrieve it, thankfully, again later when I talked to the team. But to be clear, that was not our product, that was a different product. And so yeah, I think you should just like kick at the wheels and like try it out, but also expect them to be more transparent about their own benchmarks and evals. And I want Nansen to take a leading role on that front, at a minimum publishing occasionally our benchmark results, just like LLM providers do, on how good they are at math, at reasoning, and so on and so forth. What I would love to do is to get to a point where we have like real-time transparent metrics on how our agent is doing. Yeah, and then I think at the end of the day, as with any consumer choice, a lot of people do use brand as a proxy. And it's, I'm not saying it's a perfect proxy, but there is something to it, right? We've been around for 6 years. A lot of people trust our brand because, frankly, they know that we have the best on-chain data and analytics. And so I think that trust in the brand also matters. If something pops up, you've never heard of it, yeah, you should probably pay a bit more attention and, kick at the wheels a little bit extra and figure out like how it actually works. Yeah, those are like some high-level thoughts on it, but it's a great question and something I think everyone should be, have a healthy amount of skepticism and exercise critical thinking when they try out.
And out of curiosity, are you going to have anything like a leaderboard to show kind of how users are?
Yeah, that is a great question. Maybe. Let's see.
So I know that this is like a slightly different area with like, kind of adjacent, but I'm sure you're aware that there's a number of developments in the AI agent payment space. Coinbase is working in this X402 standard. There's something that Google had released, the Agent Payments Protocol 2. And then recently they announced another new open standard called the Universal Commerce Protocol. And that's for AI agent-based shopping. And I wondered, if there's any way that you see those types of products working with your AI agent.
Yeah, I was actually vibe coding an X402 service for agents to buy on-demand access to the Nansen API this week.
Oh.
So yeah, I'm pretty excited about that. I think the user experience, when I've seen some examples of e-commerce, through ChatGPT and other products like that, is actually very similar to the user experience we have in Nansen AI. So, it's like a chat UI, and then when the agent understands this is a purchase intent, it just brings up a modal that's pre-filled, and you tap like buy. So I think the underlying concept is actually very, very similar. And the thing that's interesting to me is how quickly consumers will get used to this type of user experience. Because, some people are still comfortable with this kind of, you go on Amazon, you have like a grid of products, and like it gives you a feeling of, okay, I see all my options and I'm going to pick this one. But other people just want to go straight to the punchline and like, just give me the best option. And I trust the agent will be able to do that. And by the way, that the agent got the best price for me. So it's actually super analogous to what we are doing, except with us, of course, is investing in trading, and with these commerce platforms is typically, buying products or services. So I would say like it's like basically the same concept, just for a slightly different use case. The protocol itself, I don't think we need, because the benefit we have is that like all the data is on chain, and that means as if you've indexed it and you've done a good job at curating it, and also you're using open source tools and protocols to execute the trades, like you get kind of integration for free. And that's the beauty of blockchains, right? And the beauty of on-chain, that anyone can permissionlessly connect to all these different protocols. So that's kind of, maybe just to add to that, like part of our thesis is that the best liquidity or the deepest liquidity is going to be on-chain, which is why you're going to get the best price on-chain. And that is like, I don't think everyone agrees with that, but that is basically what we believe. And so this is amazing because it means that the best price in theory is going to be accessible to any user interface, right? It's like in the old days, centralized exchanges had price and liquidity as a moat. Binance, Coinbase, they had the best price. That's why you went there to trade. But the beauty of on-chain is that you can have all these, like lots of different dexes, and then you can have aggregators on top. And once they have a deep enough liquidity, you get actually better prices on chain, right? And so if we think about e-commerce, obviously you'd want to have the best price when you're buying a product. Similarly, if you're trading, especially when you're trading, you want to have the best price. And so part of our belief here is that the deepest liquidity will be on chain, which means the best price will be offered on chain. And we're just tapping into that. And so it allows us to make use of blockchains as that layer, which at the end of the day gives you, what you want at the best price.
All right. So last question. Obviously, this new product is kind of at this cutting edge that everybody's interested in, this intersection of AI and crypto. And it's January. So I think even though it's not near the first of the year, we can still ask about predictions. So, because this is a fast evolving space, I just wondered if you had thoughts on where this trend might go over the course of the year.
Yeah, so I think it's going to accelerate, and we're probably going to see more developments here than any of us could imagine, especially with advances like Claude Code, where you can just accelerate development tremendously. And if anyone listening has not tried Claude Code, you should literally just go and try it, because it's going to change your life. literally. And so, okay, a few things are going to happen. I think, firstly, a lot of people are going to start trading agentically, number one. Number two, a lot of people are going to lose a lot of money trading agentically because they're going to use products that are only half-baked or not very good, or because they're going to like try to build stuff themselves, which is fun and cool, and in a way I kind of recommend it, but you know, it's not going to necessarily work that well, like if you vibe code it. But then I think also what's going to happen, which, to take a more optimistic view, is that people are going to realize that we have been constrained by our user interfaces. And so we've traded in a certain way because that's how the user interface is designed. For example, you do like one transaction at a time. But I think agents are going to open this up for us, where you can start saying, you can give it instructions that are very short in natural language, like rebalance my portfolio. And it'll do that with like 5, 6, 10 transactions under the hood. And so once people get used to that, they're going to start thinking like, what are other things I can do that were just not practically possible before? And so that's one area where I expect a lot of people to be surprised, because that's kind of the nature of AI, that like, oh, wow, I never even thought I could do this because it hasn't like been practically possible to do before. So there's going to be a whole category of transaction types, or like things you do on chain that we haven't imagined before. Like that's kind of the rebalance my portfolio phrase is like a good example, and there's going to be a bunch of other examples like that. I do think that people are also going to start betting on agents more. There's been a bit of this with virtual, but to me it was always more like a bit of a meme more than a real thing. And I think in 2026 you're gonna be able to bet on agents that are actually doing things, trading or even building things, right? Vibe coding agents that you can fund and invest in and speculate on. We're seeing that a little bit with Bags FM. I'm not sure you're familiar with that, where they have these like creator coins that you can, where you can redirect the fees from that creator coin to a creator. And the creator is often like a open source developer or vibe coder or something like that. And it kind of gives you, it's almost like a social coin for a developer who's vibe coding. And if they, you know, officially accept that they will receive the fees, and they start even promoting that coin, which has happened a little bit with Bags FM coins over the last few days, then that's an interesting meta where people can start like just betting on the best vibe coders and betting on the best agents that are building stuff. So yeah, I think honestly, I think 2026 is going to be the most exciting year ever in crypto, and I think maybe even for technology more broadly, because I mean it started so strong in a way. Like we got our whole company to build something with Claude Code 2 days ago. We just literally said, hey, go and build something with Claude Code, post a 5-minute video on it in the Slack, and then we have a thread. And the stuff that people built is like mind-blowing. It's insane. There were like ideas that we've had on the roadmap that are very cool, but like, oh, it's hard, let's do it later. And then someone just vibe coded it in like 2 hours. And and so like if you just take that and like apply that to like 8 billion people, there's just so much stuff that's going to be built and so many crazy things that are going to happen in 2026. So yeah, put on your seatbelt because it's going to be a fun year.
All right. Well, Alex, this has been so much fun. I've loved learning about your new product and your history and your thoughts on where this trend is going. So thanks so much for sharing. And yeah, I look forward to seeing how people use your new AI agent.
Thanks, Laura. Great to be here.
Hi, everyone. Welcome back, and welcome to another episode of Bits and Bips, the interview. I'm your host, Steve Ehrlich, and I'm here today with a repeat guest, Steve Sosnick, the chief strategist at Interactive Brokers. So, Steve, welcome. And why don't you briefly introduce yourself for any of our new listeners?
Sure. Hi. First of all, great to be back with you. Thanks once again for the invitation. My name's Steve Sosnick. I'm the chief strategist at Interactive Brokers. I apparently just completed 30 years with the firm. That came out like an internal email, and I've been getting bombarded with congratulations. Not a gold watch, but congratulations are nice. I joined the firm having been on the sell side for a few years before that with some of the bulge bracket firms. At the time, Timber Hill, which was the firm I joined, was an options market making firm. We were just getting big into equity options trading, and they hired me as someone who understood the risks of both options and individual equities. And so for many years, almost 25 years, I was an options market maker. Along the way, I somehow got the opportunity to talk to people like yourself, and I became a talking head and then a writer. And as we moved away from options market making, which we don't do anymore, strictly became a customer-facing business. My role changed over time to whereas I became a full-time commentator, author, strategist, et cetera. And as a firm, this is a crypto-oriented discussion, and we I would say are not one. We've never been one of the pioneers of crypto. We prefer to deal in, I would argue, some more environments with a bit more regulatory clarity, being a very heavily regulated firm on so many levels. Though over time we've recognized that while we maybe weren't the first, we certainly need to be in the game, and we offer. I'm not going to call it a full slate of crypto, but I would say a full slate of major crypto products. And we've actually just announced that you can now fund accounts with stable coins. So we understand the potential, though I would say we want to avoid some of the frothier, less regulated, less transparent portions of the business, shall we say.
Yeah, well, I mean, that's great. And I have to say, if they do try to give you a gold watch, you should ask for Bitcoin instead. I guess maybe not, depending on
maybe not now. Gold's
today.
Well,
yeah, we're going to get into that. So maybe at least for a short time, gold could be the way to go. But a lot to talk about today. I mean, Greenland, everything going on in Davos. As we're speaking, I believe the Supreme Court is hearing arguments on whether or not Donald Trump can fire Fed Governor Lisa Cook. So much to discuss, and we're going to get to all of it. But before we do, just a brief disclaimer. As always, nothing that you hear on this program is investment or financial advice. For more disclosures, please see unchained.com /bits and bips. So Steve, let's kind of dive right into it. The world's attention today is on Davos. President Trump spoke earlier this morning. I guess he assuaged markets a little bit by ruling out the possibility of using force to take over Greenland and its 66,000 inhabitants, although that could always change depending on how Europe responds to that, I guess. But markets are clearly on edge. And when I was trying to think of like how to sort of start this discussion, this is one of those real moments where crypto kind of needs to take a hard look at itself, because again, gold is setting new all-time highs. Precious metals demand is going through the roof. People are looking to safe havens as yields on treasuries and Japanese bonds go up. Bitcoin's struggling. And this is just another reminder that although it's purported to be a safe haven, it hasn't sort of earned that narrative just yet. So how are you making sense of all of this?
It's funny you bring this up, because I literally alluded to this in a piece I wrote and today. You can find these all on Interactive Brokers, IBKR Campus, or interactivebrokers.com. Look for Traders Insight, or search for me. I did allude to this, and I think you raise a very important point. For a lot of time we were hearing about, is Bitcoin digital gold? And in one sense, it can be, because it's a non-dollar. I'm going to say decorrelating, but it's not. Let me get to that. But it's certainly, in many ways, it exists outside sort of the, outside of the mainstream of finance, and I mean that in a positive sense in this case. And it is sort of, it's non-dollar, it's non-fiat, all that sort of stuff. But what it's showing us is, in a period like this where it's hitting the fan, you'd expect something like this to be doing better, and it's not. And so what I think we've seen, certainly in the last calendar year, I would say since inauguration, because we're 1 year in, crypto in general, Bitcoin specifically, has become a risk asset, whether you like it or not. And we really have, Bitcoin's done very well in periods of monetary accommodation, but I think the turning point at some level was, in many ways, it's a victim of its own success. Because the ETF launches were among the most successful ETF launches ever, if not the most. I think IBIT is literally the most successful ETF launch by many measures. Mm-hmm. Crypto became an investment for normies, and I was it hit me when a few months ago I was invited to speak at a crypto conference here in Connecticut. I'm based in Fairfield County, Connecticut, and a friend of mine who I used to work with invited me to speak. They host some crypto conferences, and it was around the time where and this is something you and I had discussed, was I was saying that, regardless of your opinions on crypto, I don't think digital asset treasury companies are really the way to do it, because to me, it seemed like you were paying $2 for $1 worth of coins, which, mm-hmm. for better or worse, in many cases has played out that way. But I thought I was being invited in there to sort of be the crotchety old grandpa, saying, okay, and I'm not a grandfather, by the way, but in theory, but basically to say, see kids, this is what happens, this is where, don't go crazy in the stock market, even if you like this as a crypto investment. And I was pretty much closer to the average age of the room, the median, let's say. Now it could be because the guys running the conference were roughly my age, and that's who they appealed to. But I was, the other two guys on my panel were, I'm going to call them, crypto natives, guys in their 20s, early 30s kind of thing. They actually didn't push back too hard on my digital asset treasury idea, because quite frankly, they're not stock market guys, they're crypto guys. But I realized that the people in the room, in many cases, were stock market guys, and they were investing in crypto because they could do it in their retirement accounts, and because they could just do it like a normal stock. The problem is, we already had a pretty high correlation between the price of Bitcoin and the NASDAQ 100. And I think that reinforced it. The enthusiasm over the president leaning into crypto. At the same time, it became very easy for normal average investors who are not necessarily crypto natives to get into it. It means that they're looking at it the same way they're looking at everything else in their retirement account. And if they're, and if they are, again, if I'm in the median, that means half the people were older than me, and that means they're retired or close to retiring. They don't want to deal with a 30% drawdown. And so what we've seen recently is, crypto, we had this little bounce recently, where I guess we went from, call it 90 to 97. I think that was largely, there was a lot of buying from the said digital asset treasury companies that I think propelled it. But when push came to shove, when the risk hit the market, they went out of crypto, and but people have continued to buy gold, and to some extent silver as a hedge. Silver's off in its own world too. I'm going to say, actually, in many ways, silver is the original and current crypto favorite in its own way in terms of being a very speculative risk asset. But the divergent performance between gold and quote unquote digital gold is quite telling.
Yeah. And this is a narrative that we've seen plenty of times before. I'm curious if there's anything unique about today's circumstances that you want to point out.
Unique, I'm not sure. I think this is it's in many ways it's all too typical. It's a movie we've seen before over financial history in terms of, you've got an asset and it's made a lot of people a lot of money through speculation. I'm going to say maybe not in terms of magnitude, this is greater than most, but we have seen periods where all sorts of risk assets have gotten very popular, have seen big waves of appreciation, and then gravity, inertia. You need fresh money. You need fresh enthusiasm to maintain momentum. And at some level, the bigger the momentum, the more you need of it. And that's where I sort of came into that's where it sort of hit me that a lot of the people who are now in this are not in it because of any great love of or appreciation for the merits of crypto or blockchain or any of the other stuff. They were doing it because they were buying it because it was going up. Yeah. And now that it's not going up, it's not in some ways like, a stock where you could say, all right, I'm going to buy the dip. You did see people buy the dip and it hasn't worked as well in crypto because this is where it's a negative there's no earnings, there's no revenues. I can't tell, we can debate what the right valuation is for NVIDIA, let's say. Okay. And should it have a PE of X or a PE of 2 times X or a PE of 0.5X? That's all open for debate, but there's E there. And so we know that at some level there's a value to the asset, to the productive assets that NVIDIA controls. Yeah. Bitcoin is not inherently a productive asset in the same way that gold isn't a productive asset, in the same way that really dollars aren't. It's different. It's a store of wealth. And as a result, it's not as, in this case, it's a particularly volatile historically store of wealth. And so that's where you get into that's where you sort of find ourselves in the situation we're in.
Yeah. A couple questions on that, because I just want to go a little deeper into the store of wealth and sort of the safe haven narrative that we've been discussing. And you're a good person to ask because you sort of like cut your teeth in TradFi over, as you said, decades, but you are crypto curious, if I could be so bold. And I understand all the reasons why Bitcoin should be a better store of value in a way than gold. It's easily divisible. It's easily transferable. There's a finite supply, whereas nobody knows how much gold there actually is in the world, let alone when some meteor comes and we start mining gold in outer space. All of these things can happen. But is it just a question of time horizon? For instance, Bitcoin could experience drawdowns of 30% in a matter of days or weeks or months, whereas gold perhaps not. And the safe haven status, maybe it's a difference of perspective. Safe haven during acute moments, gold clearly is better. But I've heard many people, I've interviewed on the show and talked, Bitcoin is sort of like the doomsday hedge. Bitcoin is the asset when the shit really hits the fan and things completely go to hell. Is the debate more nuanced than why isn't Bitcoin just acting like gold during periods like this? Or I'm curious your thoughts on that.
Yeah, I mean, you raise some important points. Part of it is historical. I mean, gold has a several
thousands of
thousand
years of history,
several thousand-year head start on Bitcoin, and an EMP wouldn't wipe out gold holdings, but it would severely hamper your ability to trade your access your crypto, and convert that. It's still there's in both cases, neither is really useful as a currency. You have to convert it into something else to use it. I mean, I guess in theory, I could go into a supermarket with Krugerrands and and spend them or whatever silver coins, but realistically, nobody's going to do that. I think though the difference is just it in many ways it's how it's been operating in more recent times and who owns it. I think it's again, gold is because of gold's thousands of years of history and it being perceived as, let's call it, a stodgier counterpart to the much more exciting crypto. It hasn't had the sort of day-to-day volatility. It's just much less volatile. Its volatility is more akin to that of a currency than to a pure risk asset. That's gotten a bit more volatile recently, but still it's more currency-like volatility, or certainly no worse than, let's say, equity-like volatility. Whereas Bitcoin and Bitcoin specifically, and then the smaller the market cap of the coin, the more volatile it gets. These are volatile. These are very volatile instruments. So it's very difficult to view a store of wealth in the same way when you can have huge daily or weekly price swings. Now, one of my favorite little features, as we've seen this rally in gold and this and the move in Bitcoin, is a lot of ink, or shall we say pixels, have been spilled. Pointing out how gold has drastically outperformed Bitcoin recently, and stipulated has. The math is the math. Over a 2-year period, the performance is actually relatively similar. Gold has pulled ahead in the last couple of weeks, but when I first pulled up the chart a couple of weeks ago, they were like almost identical over that basis. So again, I think that flows into the theory of people, portfolio shifts having a big role in this, because if you're going to allocate, if you're thinking from, again, sort of the normie perspective, or the general portfolio manager perspective of, I'm going to have a certain amount of my assets in risk hedges or non-correlating assets, et cetera, you're going to go to the one that's performing as opposed to the one that isn't. And so gold has been performing, whereas, crypto hasn't. And I think that's, and because they are now both equally easy to trade, again, Bitcoin's actually, crypto's actually easier in the sense that it's always accessible, whereas you don't always have a 24-hour market in gold. But again, going back to the the broader investment world, that still operates 9:30 to 4, 5 days a week to a large extent. We're close to 23/5 at this point in non-crypto stuff, actually, but still, it's not, the liquidity isn't there at off hours necessarily. Which, by the way, the fact that you have big moves in crypto at weird times, and particularly over the weekends, is another way of saying it's not everywhere all the time, 24/7 in anything you trade. But I digress. But it makes it, if you're just sort of saying, all right, I want to have 5 or 10 or 15, whatever percent of my holdings in something that I perceive as being decorrelating, what's the difference if I'm, it's very easy for me to sell IBIT and buy GLD if I were so inclined to do so, and vice versa.
So let me just put you briefly on the spot. Do you think Bitcoin can ever be a safe haven like gold?
Ever? No, I'm not going to say that. I think it's got some work to do, though, because I do think it needs to get to a point where it has a more currency-like volatility. I mean, remember, gold is the original currency. It hasn't been for decades, but century or more at this point. But decades. So it doesn't have that volatility. But Bitcoin is still too volatile to be thought of as a means of exchange and as a pure risk asset. Now, it depends a lot on where you live. If I lived in Argentina or Turkey or some other country where generally the rule of thumb would be if my government has to borrow money in a currency that's not my own, I would want to have a big allocate. I've always said you should have a big allocation to gold. I don't see why it shouldn't be Bitcoin, especially because in many ways it's more fungible and easy to move.
I have one more question on this topic, and then we actually have a little breaking news that we're gonna discuss. Sure. I'm just interested too, because you mentioned other countries. Is it possible that any demand, like safe haven demand, that could be going to Bitcoin, perhaps could be going to stable coins instead?
Absolutely. Because again, think about it, going back to the volatility argument, right? I mean, if I can be reasonably assured, and I don't want to open the whole can of worms about what's underlying certain stable coins, but let's stipulate that these stable coins are in fact backed one-to-one by T-bills or some other sort of hard asset. Yeah, because I don't have volatility that way. I've got all the advantages of fungibility and the ease of movement. And it would be a non-correl, and it would be, again, if I'm living in Buenos Aires, I'm holding US dollars as opposed to Argentine pesos. Yeah. Sure. This way, at least if I know that I'm putting in X amount, if I'm buying X dollars worth of something, I have a reasonable belief that it's going to continue to be worth X dollars of something, as opposed to something that can fluctuate wildly. If 4 months ago I was trying to move money out of Istanbul, would I be much better off if I'd put it in a stable coin, or would I be much better off if I put it in Bitcoin? The answer should be obvious. Yeah. So I do think that stable coins, there's a value there, but then of course you have the other consideration of, cryptos are truly decentralized. Stable coin, you have somebody managing them with assets. So I don't want to go down that rabbit hole. I understand. But to answer your question, I do think stable coins have taken a lot of that luster. Yeah.
And one thing worth paying attention to as well, tokenized gold is still such a small percentage of the overall gold market, obviously, in Bitcoin too. I know that trading volume for tokenized gold, overall AUM is going up, but that is something also to consider moving into the future, because that can also perhaps siphon off some demand from Bitcoin to get the benefits of gold without necessarily with the benefits of gold and the benefits of blockchain rails together. Anyway, I promised you some breaking news, so let's get to it. I'm curious what you think it might be. So, but I'm not gonna put you on the spot. So, a new truth from Donald Trump: outlined framework for future Greenland deal after NATO meeting with Mark Rutte, tariffs postponed, VP J.D. Vance, Secretary of State Marco Rubio to lead negotiations. And if you'll indulge me, I'll just read it really quickly. Based upon a very productive meeting that I have had with the Secretary General of NATO, Mark Rutte, I hope I'm pronouncing that correctly, we have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. This solution, if consummated, will be a great one for the United States of America and all NATO nations. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. I believe those were 10% with 25% by June. Additional discussions are being held concerning the Golden Dome. That's a missile defense system as it pertains to Greenland. Further information will be made available as discussions progress. Vice President J.D. Vance, Secretary of State Marco Rubio, Special Envoy Steve Witkoff, and various others as needed will be responsible for the negotiations. They will report directly to me. Thank you for your attention to this matter. Before I ask you for a response, As far as I can tell right now, I know that the Unchained team is looking into this. I don't see any comment from NATO, any representative of Denmark or other European nations. So we'll have to kind of see what happens with that. But just at first glance, Bitcoin has already shot up from about 88% to 89%. I imagine if we look at a chart, other risk assets are also going to perk up at least temporarily, and then depending on what happens the rest of the day and after additional commentary, things could change. But we were going to get to this anyway, so I think this is a great launching off point to just kind of, I want to get your reactions to this.
Well, I mean, this news, it's obviously, a one-sided post.
Mm-hmm.
We have not heard back from the Europeans, but
right. And that's
here's
very
the
important
premise.
to note.
There have been two premises. And again, this dovetails in with what I published earlier today, which now to some extent is obsolete because of breaking news. But number one is, geopolitics don't really affect stock markets per se. And the reason being is, for the most part, they don't really have any direct effect on the things that really directly affect stock prices. So if you tell me that something's going on between the US and, and Venezuela, US and Venezuela, US and Greenland, et cetera, I'll give you the counter argument of what does that mean for Microsoft, for argument's sake? It doesn't, because Venezuela has not really been part of the world economy. The only US company really operating there in size was Chevron, and it's clear that the other companies didn't really have much of an interest. In terms of Greenland, it's 55 or 60,000 people that has, with the exception of a couple of like critical mineral stocks and things of that nature, it doesn't have there's no real impact there. But when it became a stock market event when the president threatened tariffs, because all of a sudden 10% tariffs with some of our biggest trading partners, that does, there is a very, very distinct answer to how does that affect any number of companies. And so the key to the element here was not so much that there may or may not be the framework of a deal, because honestly, there's no details there. But if he's backing off the tariff threats, well, then that takes away a lot of the concerns that markets have about the whole Greenland affair. I think you're not seeing the markets rally all the way back to yesterday's levels because we've seen him change his mind. This will also raise questions about a phrase I've heard a lot today, and various people have asked me about today, is the taco trade, which I don't like really using that. Let me state it more apolitically, because that's, I'm not a political analyst. So let me, I just want to say here, the Trump put, speaking as a former options trader for many years.
And that may, before you continue, that may not necessarily be applicable here. I know there was like the market dropped maybe like 2% or something yesterday, but that's still a far cry from the big crashes that we saw back in April before it recovered. So taco probably isn't the right analogy in this case, even though that is the parallel that everyone's drawing right now.
It's not, and it's not, and I agree with you for that reason, because he even said it in his speech this morning. He basically dismissed yesterday's decline as no big news. So, this will probably get interpreted as he always chickens out. I'm sure he's got an earful from a lot of people at Davos who are not fond of the tariff idea. I think it's, we can argue that it's a terrible, in many ways, it's a policy that's completely not at all productive toward either, to anybody's goals. And so taking it off the table is fine. You alluded to the reaction. I see, as I'm turning my head to look at my other screen. We got Bitcoin back up to like 90K, which is sort of, to me, this line in the sand between true risk on, risk off. money's flowing into small cap stocks, Russell 2000 zooming, but I think that's, again, just largely momentum as much as anything else. We are seeing more than a % rally in most major stock indices, but we should, if there are tariffs coming, if there was a tariff threat that got the markets nervous, and then the threat of tariffs is being withdrawn, we should cut back a lot of it. Now, I don't think we're necessarily going to race to get back everything, because there are other things going on in the world. Much stronger Chinese yuan, a much weaker Japanese government bond market. There's other things affecting stocks and other asset classes, and U.S. bond yields. But certainly, I understand why there's a bit of a risk on bump on this news. We should have one.
Yeah, so let's talk about bonds, because I was meaning to bring that up earlier today. I mean, the 10 years up, longer dated bonds are up, and then there's a lot of fear about what this means for the Japanese put with their bonds going up too. So I'm sure you had some thoughts on this morning. Has that changed at all with this kind of recent news, or not? I mean, how big of a force is that vis-a-vis what we just heard?
I think actually it's a separate category here. I just saw, I see now U.S. bond, the 10 years about 426. I noted on Friday that I was concerned that the yield popped up through 420 on Friday. That's been sort of a line in the sand, but it did it on light volume, so I was a little bit dismissive of it. I think with the further rise in Japanese yields over the weekend, that really put a damper on global bonds overall, U.S. bonds as well. I think a key element when we look at what goes on in Japan is the carry trade, where people borrow money in yen. People borrow money in yen and then use the yen to move elsewhere. Now you're losing a lot of the yield advantage because there was a good yield advantage to borrowing in yen as opposed to the U.S. dollar. That's not fully evaporated. It is at the long end, but in the short end, there's still a little bit of an advantage. And the lack of confidence in the Japanese bond market has caused the yen to weaken relative to the dollar. So you're not seeing people unwind their carry trades, and also I think after the shakeout last year, the carry trades are not as big as they were.
Okay.
But that does have an effect on risk assets. And again, as I stipulate, Bitcoin, other cryptos are a risk asset still. And so, that's something that bears watching. I do think it had a lot, I don't think it's necessarily a coincidence that part of the, that a lot of the reaction that we saw in Bitcoin over the weekend, could have been a bit of a front running of the Japanese bond market. This is where it becomes difficult to disentangle things. I can't fully disentangle all the pieces of spaghetti here, but they all do have a big influence on people's risk tolerance.
Gotcha. And just going back to Europe briefly, I'm curious what you think this means for the US-EU trade agreement, because it still has to be ratified by the EU. I know there were statements that it was pretty much being put on hold because of this new drama over Greenland. We're talking right now and don't know exactly what the reaction is going to be from European counterparties to whatever these negotiations were in Davos. But how big of an overhang is that on markets? And if because of this issue, which I would imagine, even if the U.S. is somehow able to acquire Greenland, which I don't even know how that process would work, it would be months or years before that would probably happen. I'd imagine that kicks out the deadline for any trade agreement between the EU and U.S. Ratification of it, implementation of it, much further down the line. What do you think the market impact is going to be on that from that?
Well, I mean, literally, the headline hit that they were the headline hit about declining to ratify the deal while the president was speaking. So I don't think that timing was a coincidence. I think that we have to remember other countries have cards to play, and that is one of the cards that they have to play. And again, we don't know what's going on behind the scenes. at Davos. We don't know. I don't know what conversations the president's been having. For example, the president was supposed to speak on CNBC. When I got on the call, they were teasing that he was going to come on any minute. I have it on silent in the background. He still hasn't come on yet, probably because he was, because he was doing whatever he was doing that led to this Truth Social post. So these are all very moving targets. But again, I think, and when you step back, if we wanted to exercise a bigger presence in Greenland, it's doable. There are treaties that say we can go open bases pretty much all around the country if we wanted to do so. But I think Scott Besson put it as basically we'd rather own than lease. I guess speaking in terms of the real estate, idea that the president, president's background in real estate. It's a fluid situation, and I guess the problem is whenever it comes to tariffs, these are situations of our own making. They come up as a problem. They come up as a problem because the president chooses to use them as a tool. Now, the other thing that we still have to hear about, we could have heard as early as yesterday. We certainly didn't hear today how the Supreme Court's going to rule on the tariffs. And what the remedies may or may not be if they rule that the tariffs are, were not done with the proper authority, and even if they knock down the tariffs, there's other measures that they can put them back in, and do they have to repay the money? There's so many moving parts when it comes to it, but ultimately, as we learned last April, the tariffs sort of exist at the president's whim to some extent, at least in their current form. And so, at this point, he chooses to threaten or implement them, and he also chooses to renegotiate or withdraw them. That, to me, as someone who's spent his life trading volatility, that adds volatility because you never quite know where you stand. And I think the president views that his personal volatility as an asset, makes him harder to pin down in his mind. But from a market point of view, it's actually sort of remarkable that the stock market's just rolled with this, with his personal volatility and his policy volatility.
Yeah. And I think that comes down to just this whole idea of, like my background, as I think before I even got into crypto, was in geopolitics. Yeah. I've been thinking a lot today about NATO because I've been there. I've toured. I've met soldiers from the Baltic states, and for them, and this is more than 10 years ago. After Russia started making a few entreaties into Crimea, but before the big invasion in 2014 and stuff, this is a life or death situation for them. They see NATO membership and the existence of NATO as existential to their future as independent, sovereign nations. You talk to people from Estonia and they still remember the cyber attacks on Tallinn and all those types of things. And the reason I'm bringing all this up is because it sort of reminds me of how much goodwill the United States has created for itself. Ever since the end of, World War I, when we became the global financial superpower, and then especially after World War II, and then even more so after the collapse of the Berlin Wall and the whole idea of Pax Americana and sort of the predominance of liberal democracy and our sort of role as the benign hegemon. And the fact that, with all of this, I guess, whiplash, for lack of a better term, from policy, creates all this doubt, all this volatility, as you said. A lot of markets are taking it largely in stride because I think of the power of the U.S. and the belief in just overall policy stability over decades, notwithstanding this particular blip, regardless of where people stand on the president personally and the efficacy of these policies. So it's really kind of fascinating, and I think that's an important perspective to keep in mind. Geopolitics, as you said, I used to work for a political risk firm, and it's very easy to say politics affects everything, and that's an oversimplification. But like it is still relevant, and there's times when it's acute, there's times when it's more in the background, but it's still relevant, and that's something that it's always kind of interesting to remember. So it's really interesting to see what's going to happen with all of this, and I mean the future of NATO, like that'll have huge impacts on markets and so on and so forth. Go ahead, and then I was going to
again, I think that I'm encouraged by the idea that it seems like the discussions were with NATO today, because maybe somebody reminded him, and I don't know if it's a feature or a bug in his mind, but that weakening NATO, that is like literally Putin's wet dream.
Yeah.
I mean, you're playing right into his hands by antagonizing the other NATO members, and the idea of actually almost outright threatening other NATO members is insanity from a geopolitical point of view, at least as I perceive it.
Yeah. Believe it or not, Russian, it might have been either the main Russian spokesperson Peskov or the foreign minister Lavrov actually put out statements praising the U.S.'s policy towards Greenland, and like clearly, I mean, their whole Russia's goal over the last, I don't know, how decade plus has been to delegitimize and break up NATO. So this is like exactly what they're hoping for, and it's going to sort of bind the U.S.'s hands, I believe, from negotiating an end to Ukraine and the war too, if the U.S. is pursuing its own territorial expansion. But anyway.
Yeah, no, we could go on, but again,
right.
I don't want to make it too political. I want to stick to. You and I could talk offline about politics, but from a public thing, I got to stick to markets.
Fair enough. All right, so let's go to one more big market story before we start to wrap up.
Sure.
Today, the Supreme Court held hearings on whether or not Donald Trump could fire Lisa Cook, and I mean, the Supreme Court has upheld his ability to fire heads of or commissioners from other regulatory agencies, but the Federal Reserve, by statute, is independent, and it has always kind of, even in the eyes of this conservative-leaning Supreme Court, has sort of had a special type of status. From what I've read about the hearing, it seems like the justices are not disposed to letting Trump fire Cook, and this comes on the back of a number of Republicans standing up to, I guess, the Jeanine Pirro's investigation into Jerome Powell. So what do you think that's going to mean for the dollar? I mean, there's obviously a lot of things are in flux right now, but it certainly seems like there is some resistance, and there's bipartisan desire for sort of an independent Fed and sort of continuing to ensure the domination of the U.S. dollar. But I'm curious, like, your thoughts on that and how that plays into everything else that we discussed here today.
Oh, I think that there's a broad consensus, bipartisan consensus, that Fed independence, central bank independence, is of paramount importance for markets. What was one of the examples of a currency that I gave you? If you lived, was Turkey. If you lived in that country, I mean, their central bank has been essentially a pawn of the political wing, and their currency has suffered mightily as a result of it. When you think about it this way, who else really is in a position to fight inflation from a monetary point of view? Right. I mean, there's things you could do, price controls, whatever else. But realistically, the best, the tried and true method for fighting inflation is, for better or worse, through the central bank interest rate policy lever. And I always joke around that there's the third leg of the dual mandate. There's stable prices, there's maximum sustainable employment, and then there's don't be Arthur Burns. And, for those who aren't familiar with
we
the
actually
history,
discussed Arthur Burns last week on the show, but yeah, please.
I missed that. Did you really?
Yeah, I mean, it's sort of the epitome of what not to do. And, but please go ahead and explain it for anyone.
Yeah. So Arthur Burns was a crony of Richard Nixon's, and Nixon wanted, lower interest rates, and Arthur Burns kept the rates too low for too long, which fed in mightily to the inflation of the 70s. I know the president has said, "Oh, the inflation under Biden was the worst ever." That's not even close to what we had in the 70s. Yeah. A lot of that was made worse by various oil shocks and Arab oil embargoes, which were not the Fed's problem. But at that point, you'd already baked inflation into the system. So when those hit, that was basically like throwing gasoline on the fire, even though gas was embargoed. But throwing fuel onto the inflationary embers, and it took a lot of hard work and a lot of pain from Paul Volcker to bring that into play. And I think people who have studied economic history understand that, which is why it's one of the places you've actually seen wiggle room between Scott Bessent and the president, because Bessent taught economic history, actually, among other things, sort of post hedge funding. And I think everybody realizes that central bank independence is paramount. I think that's why you had such a swift condemnation of Jeanine Pirro's run at Powell. I don't know that we know or will ever know to what extent she did it on her own just because she thought she was appeasing the boss, vis-a-vis, getting a nod and a wink from people in the administration to do this. We'll never know. And clearly they're leaning toward the side of plausible deniability. The Lisa Cook thing, obviously, I was not listening into the Supreme Court debate, but I have read up on it since. It seems to me that justices from both sides of the aisle were pretty clear about not about the Fed's sort of special circumstances. And again here, it was either Kavanaugh or maybe even Alito who brought up the idea of this hasn't even come up in court. How can you if Alito is questioning, if Justice Alito is questioning whether or not there's justification for doing so, regardless of whether regardless of whether this is legal or extra legal, but if this is, if even he's raising questions about what are your grounds for doing this, you do have to wonder that it seems like they beat this one back. But again, like, how much of this was Bill Pulte himself taking this on because he thought the president wanted it? How much of it was the president doing it himself? Again, I'm sure they're going to lean toward plausible deniability, especially if this is adjudicated in a way that they don't like. But you do have to wonder. I think this is one where the market has spoken very clearly. And I'd like to think that maybe they've learned their lesson about maintaining central bank independence. But as we discussed earlier, things change very quickly.
Yeah. Well, I think that's a great place to wrap up. So Steve, as always, thank you for joining. Thank you to everybody for watching and listening today. And up next, we've got Uneasy Money with your usual hosts, Kain Warwick, Luca Netz, and Taylor Monahan. So please stay tuned.
Hey everyone, I'm Kain Warwick and welcome to Uneasy Money, because what happens on chain never stays on chain. I'm here with my co-host Taylor from Security at MetaMask and Luca, the CEO of Pudgy Penguins. One quick thing before we start: nothing you hear on Uneasy Money is financial advice. We're just three builders talking about what's happening on chain, and we want you to always do your own research before aping in. You can find all our disclosures at unchainedcrypto.com/uneasymoney. Before we begin, well, here's a word from our sponsors.
The Energy Network is an intelligent, decentralized grid that coordinates smart devices to balance supply and demand. Energy Dollar is the native token of the network from one of Europe's fastest growing energy startups. Follow at Fuse Energy on X to find out more.
Multi-Chain Advisors is an emerging technology growth firm that has helped create $50+ billion in enterprise value for 80+ clients over the past 4 years. They're the partner to help navigate markets. Build real traction today at multichainadv.com.
Hey guys, all right. Let's see. If I had told you in 2017 that the price of Bitcoin would be linked deeply to the future of Greenland, I don't know if you would have believed me. But that's the world that we live in right now. It's pretty wild. I'm sure there's a Greenland token that's even more intrinsically linked to the fate of Greenland, but for now it's just BTC price action. PA has just been wild the last even the last 8 hours. It was back up to 90, down to 87, back up to 90. I don't know what is going on. We can't figure it out.
It feels dude, it feels like whoever, because we still haven't figured out who blew up. Somebody definitely blew up on 1010. Feels like whoever blew up is not done trying to recoup their losses. I don't know. I saw that scam wick a couple days ago and I was like, I had PTSD. I was like, no, please.
No. What if it was the president of Greenland that blew up on 1010? That would actually check out. All right. So our first topic today, outside of Greenland, is the Trove token. This is a very interesting situation. I think it was quite interesting for me because the Trove ICO was going on at the same time that Infinex was doing the Sonar sale. So it was quite funny to look at the different take on Trove on the timeline. It was super positive on Trove. Trove was amazing. Future of France, the most egalitarian thing we'd ever seen. And Infinex was a giant scam. And here we are. I guess, the Infinex token hasn't launched yet, so maybe it'll also go down 98% in the first 15 minutes, but who knows? So Trove markets, they raised 11.5 million in a public token sale. There was originally supposed to be a deployment on Hyperliquid, and Trove was or is, I guess, or I'm not 100% sure where they're at now, but they're basically RWA market for Pokemon cards and things like that. I actually had one of our investors shill this to me, and I had a look at it. And there's quite a few projects that are in the space, right? That are doing Pokemon cards, doing rare assets, baseball cards, etc., that you can open up a pack of cards or open open a some kind of loot box and cards come out. We need to do that for the Pudgy Penguin cards, Luca. I don't know, maybe you're already planning that. I don't know.
They're coming. Once Tay gets her box, we'll just do it right here.
I'm so excited.
We'll sell it.
Dude,
sketch. We'll give it to an audience member.
I've ripped 55 boxes with my kids now. We bought 60 boxes. We're down to the last 5 boxes. We need 2 epic foils to complete our foil set, and we are starting to lose hope. I'm not gonna lie. It's pretty crazy. My son every morning wakes up, he's like, you could see he's just got like this 1,000-yard stare where he's like, should we open another box? And then we open a box and it's like, just we never get these cards. It's crazy. Anyway, so Trove is like, we're gonna create a perpetual futures market tied to collectibles, CS2 skins, a bunch of things, and they did their ICO, they did the token sale, and it was oversubscribed. And then they like didn't refund people or didn't fully refund people. I still haven't been able to get to the bottom of exactly how this worked. I saw someone write up like a long thing of like why they didn't refund, but it seems like they refunded some, but not all. They basically kept the money. And right before the TG, they said we're pivoting to Solana. So that was also a little weird. And then I think the ICO launched like well under the original price. The TGE launched at like under the ICO price and then went down to like 1 million FDV. So I don't even know how that's like, it seems weird. Like that's like worse than a meme coin. So the whole thing is pretty wild. Apparently the other component to this is this is just like in the last few hours I've seen posts about this. They had a huge campaign where they're paying KOLs to tweet positive things about them. And one of the KOLs said, you know, I went through this whole process. I wrote up a big thing about it. And, you know, at the bottom, I want to disclose like this is a paid promotion, and their manager, because KOLs have managers now, was like, no, the project says no to that. And then they were like, well, I'm not doing it then. And so they like refunded the money, the whole thing anyway. Then the thing blew up. So yeah, it's pretty wild out there.
So many of the KOLs are coming out and being like,
sorry
oopsies.
guys. Yeah.
And then also there's like, you know, there's always the flood of people who like have that like unanswered DM and they're like, oh shoot, I missed out.
Yeah. Yeah. So I think, look, you know, the interesting thing to me about this whole thing, right, is like we did this before twice. We did ICOs, then we did IDOs, and now we're running back ICOs, and we still cannot fucking get this right. Like,
it's insane.
It's insane. It's completely insane. Like, how is it that we can't figure out a fucking way to sell tokens to people and not have it just blow up immediately? I don't get it.
I've got a lot of takes here.
Let's go. I need some takes. I think negative, positive. I need something.
Well, I also dodged a bullet, so we'll get into that in a sec. But
okay.
I think the first one is, you know, if you take a company public, you go to JP Morgan, Morgan Stanley, Goldman Sachs, and they do all the bullshit and they make sure everything's set up and they take their fee and the thing launches. If you're a token founder, right? There's no JP Morgan or Goldman Sachs. You either have the right investors or the right people in your corner telling you how to do it, or you don't. And if you don't, you get smoked every time, like 99.9999% of the times. Like there's maybe one outlier to the rule, and that seems like a problem worth solving, I would think. Something that I've been thinking about. I know other people have been thinking about, but it seems like a pretty big problem. So that's one. I think. The other one is I love the product idea, right? Like the idea, I think, has huge potential for PMF. You know, I'm somebody who rips tons of Pudgy Penguin cards, but also all the basketball cards and all the, you know, this physical collectible market is a huge one, $500 billion, growing like 4 or 5% year over year. And they have huge liquidity issues. It's a very archaic system. Part of the reason it being archaic is what makes it fun, but you know, obviously, I think there's some innovation to come there. So I love the idea. The guy actually reached out to me and I wanted to help. Like it seemed like pretty kosher. He wanted to do a Pudgy Penguin collectible perp, like take one of our rare collectibles, add some perps. I was like, all game. The guy that I was talking to is actually not any of the guys that I knew were getting a lot of shit on X. This guy seemed really smart, really kind. He ended up being like, I was like, hey, let's do something. I ended up never doing anything, and then the launch went to shit. So like, thank God, because I would have been fucking grouped into that.
Yeah.
But it's a good idea, right? Like, and it had some promise. I mean, the idea that obviously accrued huge value. I think where this went wrong is like, at least the conversation I had with the guy that I was interfacing with didn't seem ill-intentioned, and obviously they have some version of a working product live. Like, it's not a complete sham, right? Like, there is, I don't know how hard it is. It seems like we're putting perps on everything, so like maybe like Hyperliquid or something has made it really easy. Again, I'm not sad.
So like, it is hard, and if someone tells you they're gonna perpify something that's like completely illiquid, the person is most likely retarded.
Okay.
That's like the starting point. Like, dig into, like, ask some questions and like see what you get back from them. Because if they're like, hey, we're going to like, create perps on like the art market or something, right? It's like, yeah, okay. What's your oracle? Like, how are you doing this? Like, really, there are so many challenges with making perps on illiquid assets. It's just not an easy thing, especially illiquid fragmented assets, right? Because then it's like, okay, if we make a perp on pudgy penguins, right? Is it the floor price? Okay, fine. Like, that's fairly liquid. Like that, on like, this is the NFT, right? Like, NFT floor price, perp, cool. Like, there's enough movement, but I promise you, there is not enough liquidity for people to not get their fucking faces ripped off on that all day long. Because, like, I could go right now and put a couple hundred ETH into the floor price of Pudgies and probably raise the entire, raise the floor price by like, I don't know, 20%, 25%, right? There's no one with standing orders that's going to sell into me. Like, there's a few, but like not enough, right? Like, no one's like, the floor price is actually 7 ETH, and therefore if you try and push it above 7 ETH, I'm just going to infinite sell into that, right? Because they kind of can't. So there's a very challenging problem in taking an illiquid asset and making a perp. Like, it's just going to get manipulated, unfortunately.
Yeah, it seems like those oracles are so easy to manipulate too. Like, oracle prices,
totally.
Yeah, that makes sense. Well, thankfully, I dodged a bullet.
You did.
Yeah, you did.
Yeah, and honestly, Kain, you made me just realize I probably should think a little smarter technically. I was like, oh, you guys figured it out, so let's throw these fucking gold pounds on there. That was a little naive, and so I'm glad I didn't have to fucking deal with that.
Yeah,
I'm glad I didn't have to deal with that.
But look, my hot take on that is like, a lot of these problems are not intractable. Right? Like, they're hard problems. They're not intractable. And, you can kind of iterate your way towards like some kind of solution to them. So I think like the base case of not rejecting everything out of hand is actually fine. Like, I think you don't want to turn into one of those people that's like so cynical that like nothing can work and everything that someone pitches you, like, that won't work. I've seen that before. Like, I hate those fucking guys. Like, get out of the space. Like, go do something else. We're not done innovating here.
I don't know. I have a couple of red flags that I'm just like, you know what? We're just not even going to waste time investigating. All right. And it served me well over a decade, okay? So maybe you guys should listen to me once in a while. The first thing is, whatever the hype thing is, so right now it's perps, like, you have to put it in like the negative bucket land, and then they have to work their way out of that just by like riding the coattails on perps. And then this pattern where they do like the most popular hype thing, but with another like cool thing that feels more genuine. Like, I've seen it so many different times. And so that's what stands out to me about this. Or is like, this just seems like if you kind of zoom out and you're like, I want to scam a bunch of people of money. What is
these two narratives together? And,
yes, exactly. Yeah. Right. Yeah. And so that one served me pretty well. I mean, I've also missed out on stuff, so let's be realistic about my success rates on this.
You haven't lost money, but you haven't made money either. So this is my point, right? Is like, it's better to get scammed every once in a while than miss out on like 1,000x.
So yeah, and then the other thing I think is just, I think it's just really genuinely hard to like unpack the intentions of people these days, because just like the conversation is all over the place. The sort of like the trust indicators, the things that you have are all manipulated as hack. You also don't necessarily like want to operate solely on like super great trust indicators. Like a project without any sort of like attention and hype is not going to be great either.
Yeah.
But I do think that like, I don't know, it's going to be, I think it's going to be hard to like really get to a like a perfect position, but I think that we can at least get to a position where we don't like throw a huge amount of money at someone who then immediately like screws it up, right? Like,
yeah, this is the problem though, in like, you know, this kind of oversubscribed meta as well, right? Like, remember, Mega ETH had 1.2 billion in bids, right?
Yeah.
Like, and you know, Mega ETH is very trusted, like been in the space for a long time, like, you know, good people, but it is possible to create enough FOMO that people will put 1.2 billion into a contract. Now, there was also like sonar guardrails around that as well, right? Like, but you know, like that's a lot of money in a pot for someone to be like, oh, actually, maybe I changed my mind and the price is really 10 billion. So thank you. And then they just like go waltz up into the sunset. They've got your money at that point. What do you do, right? So I think like, you know, we tried so many different ways to like stop ICOs from becoming super extractive. And like CT is obviously retarded because literally like you know, you can't trust KOLs, right? Like they're being paid to say things. So you have KOLs who, you know, and there's some that are, you know, transparent about this, but like on balance, you really can't trust them, right? Like if that is the only indicator, especially I mean, talking about like red flags, right? Tay, like one of the things, if 95% of the KOLs are in agreement about something and there's like no dissent, that is a crazy paid campaign that is being run on you right now, where people are throwing money. And, you know, let's say you throw $1 million out at like the top 50 KOLs, right? Pay them 50K each or something like that to you know, tweet positive things for a week, build up a ton of hype, and then you raise $10 million. Like, that's very positive EV for the person raising the money, right? Like, so yeah.
And I think the other thing that we don't touch on as much is like some of this is like the new generation's like rejection of VCs and like anything that's even slightly professional-ish. Like this, for me, like I still don't understand the KOL situation. Like I don't understand how people are operating off of that. Like I see it and I'm just like, why would you listen to this person? They're literally being paid. Like,
yeah, the anti-VC meta I do get, right? Because let's not forget,
I get that.
There's a long period of time of like low float, high FDV. You know, everyone bought the token at 1 cent, and you're buying it at like $2, right? And they're just gonna like dump into you forever, right? And so people look for some alternative to that. They go to meme coins, right? Or they go to this thing, or like they do perps or whatever, right? Like the job of most people in crypto is trying to make money. They're trying to like, they're trying to find a way to turn $10 into $1,000 or $100 into $1 million or whatever their target is. And if they see one game that is stacked against them, they will try another game. And, sometimes the game is stacked against you in a way where like you can see what the rake is, right? Like VCs are like, we are going to take 50% of all of the value that is created in this place, right? And people go, ooh, 50%, that feels bad, right? And then they're like, let's go to meme coins. And it's like, the meme coin guys like, we're going to take 99.9% of the value that is created in this place. And it's like, you can still make money, but you have to be 1 in 1,000 person, right? And then, it all gets kind of
but that feels better for some reason, right? That feels like, because it's partially just the rejection of the VCs rather than like a return to first principles and being like, actually, what does success look like? How should I gauge this, etc.?
You know, it's funny. Like I was big into Echo early on, right? Like I had an Echo group. I was in a bunch of Echo groups. I was in like those early rounds, Mega ETH, like this is going back to like early 2024, right? Like two years ago now. And like Echo genuinely felt like it was starting to solve some of the problems. You had at least alignment between like the group lead. It was kind of an ICO. It wasn't exactly an ICO because it was early stage. There was no liquidity, but it was like, we can replace VCs with this approach. We can raise $2, $3, $4, $5 million. And even that got like very quickly turned into farming. Probably the biggest group, I won't name it, but there was one particular group that did hundreds of deals with like a 10 to 20% carry, raised, I don't even know, like maybe like $500 million or something. Like it would be some crazy amount of money, with a like 10, 15, 20% carry on average. So, like it might be 20 mil or something like that. I don't know exactly how much it was, but like it could be 20 or 30 mil of free rolls into all these deals. And, a lot of the deals were not amazing. And that became the most popular group because it had the most deals. They always sold out, had the most people in it. And it was like, this is adverse selection to a massive extent, right? Like, but even then there were groups that you couldn't get into. People wanted to do Echo. And so they were like, well, I can't get into, Guy from Athena's group that does like one deal every 3 months or something like that. So I'm going to go into this group, and this group is going to be, my ticket out. And, even talking to Kobe, he's like the idea that somehow from a project perspective as well, that 200 degens would be better than your classical angel investors or like Hasib is ludicrous. And we've now tested this. We have empirical data. It is not better. It is definitely not better, right? So it's a challenging problem. Like even when you have a system, which I would have and did argue, like in Echo, that was one of the most well thought out schemes from like an incentive and mechanism design perspective, and it still has the ability to kind of unravel to some extent. It's pretty wild.
Because there's so much money on the table.
There's so much money. There's so much money. You're going to get adverse selection. You're going to get perverse incentives. People will find a way. They'll find the bug. They'll find the bug in the thing, and they'll find the edge case that you didn't think through. And unless you're willing to
like run it, like they don't just like look at it. They will like
so quickly. I know. Yeah.
That's actually like a good transition to this next one, though.
It is. So I don't know. I can intro the InfoFi stuff, or one of you guys can take it. Up to you.
Luca, do you want to say something?
Yeah, it goes back to my point though. It's like I think the people don't know what they want outside of them wanting to make money. Just to like this final point, it goes down to like I said earlier with Trove. It's like, the VCs like can help you do it to make the launch way better. I promise you, if those Trove guys had like a good person on the cap table that was aligned in a meaningful way, the launch with that launch specifically, and Kain, you'd probably attest to this, like that was a breakdown of like, you didn't know what you were doing. That was simple through and through, right? Like that wasn't, you either scammed or you were completely oblivious and hadn't done it before and had nobody in your corner who had done it before. And that was a complete meltdown. Right? Like there was like all the things that you just have to like you underwrite if somebody good was in your corner, right? With a lot of incentives, they
gave like 20% of the tokens to DWF or something like that, right? To market make or like something ridiculous. Like that's the only way that can even happen, right? Like they gave like 20, 30, 40% of the supply to some crazy market maker who just dumped into the chart. That's the only way that you can have a 98% down candle in the first hour is if there was like 10 times more float than was expected, just dumping with impunity.
Yeah. Yeah, which is insane. Like,
which is insane. But to your point, Luca, like no one would advise you to do that. You can only do that if you have no idea what you're doing or if you're scamming. And like, you know, I don't know the answer, but like, you know, the result speaks for itself. The outcome speaks for itself.
Yeah.
All right. So speaking of making money in crypto, one of the ways that people tried to make money in crypto over the last year was InfoFi. And the interesting thing about InfoFi in terms of, you know, people running things, right? And people seeing a gap and you know, running towards it, right? Was that InfoFi really required no capital. You could almost convert like pure time and energy and effort into money. And so, you know, there was a category of people that was extremely attracted to this. And, you know, this is not the first time we've had this. Airdrop farmers, you know, saying GM in a Discord or whatever, similar vibes, right? So this was an extension in my mind of like the airdrop meta, you know, trying to maximize attention on the timeline. But this week, or last week, I guess, sorry, X nuked InfoFi. Just like
completely
lost the entire thing. Like, just like nothing will ever grow there for like 10,000 years. Like, just absolutely wiped it off the face of the planet. And, you know, like, whether you agree or disagree with InfoFi or you think it was a good idea or whatever, there is something, in my mind at least, about the fact that X is aware enough of this thing going on to actually go and nuke it that feels so bullish for X right now. Like, they are actually tapped into what's happening on their platform. You know, one of the biggest criticisms of Twitter, the OG Twitter, right, was none of the fucking people who were running Twitter used it. They were not users of the platform. Like, and they actively talked about that, right? They're like, yeah, like they never tweeted, they never did anything. They had no idea what it was like to be on Twitter. And you know, Elon came in and was like, I know Twitter.
I use Twitter a lot.
I use Twitter. I love Twitter, right? And so the fact that you've got people who actually know what's going on to sufficiently in like this niche category, right? Like, Twitter is a big place. Like, crypto is a smaller place. InfoFi is an even smaller place within crypto Twitter. And the fact that they were paying attention enough to like go and nuke this thing is pretty wild, and feels pretty bullish. So I think it also speaks to like they are paying more attention to crypto than they are maybe giving off right now. So yeah, InfoFi is over. It had a good, bad run. I don't know.
How did Kaido take it? What's that chart look like?
Yeah, they didn't take it amazingly well. I think, you know, interestingly, Kaito, whether they saw this coming or they, you know, Kaito was one of the first ones to it. They saw the perverse incentives. They saw what happened when they opened it up to like an infinite number of bots, and they were already in this process of curating it. I don't know what happens to Kaito from here, to be totally honest, because, like, I mean, just even this one stat, right? The Yapper community, which was like like an X community. So this is like a place where there's like a kind of its own timeline of people tweeting. 157,000 accounts in there, which it would have been like a billion accounts if the bots weren't constantly getting nuked, right? But 150,000, I guess, accounts that had escaped the bot purging, all just the whole community got nuked, which is pretty wild as well. So yeah, like I don't know how InfoFi recovers from this, because like the primary vector in my mind was on X, and if you can't access X, then I think it's over. But yeah. Yeah, pretty wild.
I don't know. I don't know
yeah.
Well, I genuinely don't know what you do from here. Like, as if you believe in this idea that people should be able to yap and make money and whatever, I don't know what you do from here. I would recommend figuring out a different thing to do, but that's just me. I think fundamentally, and I've had this belief for so long, like I don't think that, like, so many people say, like, you add money or you add a cost to something and that'll solve the problem, and it always does the opposite. And this is like early internet days when email spam was a thing. They're like, let's charge people for email. The result of that is not that the scammers stop paying for email. The result is that every single legitimate person doesn't pay, and only the people that know they're going to have ROI, which are the spammers and the scammers, pay.
Yeah.
It's always like this. And I don't know why we have to keep relearning that, like, the money just kind of screws things up, but we do.
We always think there's a chance. We're always like, this time it might work.
But it automated KOL marketing, basically, you know, it was.
Yeah.
But, you know, so the interesting thing is, right, like, there was a period of time where you had this organic, somewhat transparent, you could see which projects these KOLs were grinding on, right? Like the leaderboards were public, you could see everything. Kaito gets nuked, basically. 20 minutes later, you have this backroom Trove deal where, like, you know, no one knows what's going on. It's like direct payments. There's no transparency at all. So, like, there's an argument to be made that, like, it's only going to get worse when, you know, the KOLs now have got a taste of blood, right? They're not going to stop trying to get money for yapping about things.
Yeah. And I don't necessarily, like, expect that to change that much, but for me, it was the replies. So, like, oh my God, it was like, if I got tagged in a certain thing, because luckily the bots were not latched onto me, but like, if Zach
must be
oh
nice.
My God. If someone tagged me and Zach in a tweet, or if Zach tagged me in a tweet, or every time
crazy.
Or the MetaMask account, like the primary MetaMask account, it was like, my feed would be destroyed by just, like, it's not even slop, it's just like words, these like blank words. And it sucks because it makes it really hard to engage, like, on a genuine level, which is what I want to do, right? Like, I want to have conversations with people on Twitter. I want people to read my stuff and I want to reply to them. I want to learn about cool things. And when you add this layer of incentives and you add money to it, and then you have all these people running around yapping, like, it really
creates noise. It's just noise. And, like, you know, OG reply guys, and I was a reply guy back in the day, right? Like, you know, the goal was to say something useful.
Yes.
The idea that you just, like, write 3 random words under every tweet and hope that works is kind of wild, right? Like, I don't know how anyone thought that was a good strategy.
That's what I mean. Guys, come on, stop it. Stop incentivizing people to be butts on the internet, okay? Thank you.
All right. Before we continue, here is a word from our sponsors that make the show possible.
The world is about to see one of the largest infrastructure shifts of the century. New technologies are using more energy than ever before, but our legacy grids can't supply the demand, and we are barreling towards a global bottleneck. So Fuse is rebuilding it. The energy network is an intelligent, decentralized grid that coordinates smart devices to balance supply and demand. The network harmonizes existing infrastructure, increases grid capacity, and unlocks low-cost, clean energy. Energy Dollar is the native token of the network. The more electricity the world needs, the higher the demand for the energy network. The value of energy dollars may fluctuate. From one of Europe's fastest-growing energy startups. Follow @Fuse Energy on X to find out more.
Multi-Chain Advisors is an emerging technology growth firm that has helped create over $50 billion in enterprise value for more than 80 clients, like Pith, MoonPay Commerce, and Wormhole. They've worked with some of the largest and most impactful companies in the space. They're the partner you want when you're navigating markets and trying to break out from the noise. They help navigate TGEs, go-to-market, BD, and partnerships, capital markets advisory, PR, media placements, KOL activations, and more, driving execution from launch to scale. Their results are measurable. To learn more and start building real traction today, visit multichainadv.com.
Okay, Farcaster hands off the keys. So Farcaster is going to be taken over by Nanar. I hope that's how you. I hope that's how you pronounce it. At first, I read that as Neymar, and I was like football players taking over Farcaster. That they're turning it into, I don't know. So according to Dan Romero, the deal transfers protocol, contracts, code repos, the app, dev tools, and Clanker, which is their AI launchpad, to Nanar. So I don't know what Nanar is.
That was my question. That was my question. What is Nanar?
I don't know.
Infra. It's like one of the infra builder tools for Farcaster. So it's just like,
okay. So it's like an internal transfer.
It's like
okay.
I could give you the NFT comparison. It's like other side buying immutable or
oh, okay.
It's like one of those, or improbable buying other side. It'd be that equivalent.
Okay.
Like the thing that helps power it is now absorbing it.
Is now absorbing it. I feel like we've seen this before with chains, but it's interesting with an app. So Farcaster raised 150 mil in 2024 from Paradigm and Andreessen. And I love to make fun of Andreessen for putting money into dumb things, but this is not one of them in my mind, right? Like the idea that we could rebuild social was like a 1 in 50 shot. And I wouldn't even say that you declare defeat here and never try this again, right? Like, I think there's something to be said for continuing to try to build new social networks with different incentive structures. Like, there is no way in the world that the existing social networks that we have today will be the ones that are dominant in like 10-20 years, just like from an AI perspective, right? Like, we're going to go through some kind of singularity and things are going to change. So having like different incentives, trying different things, it makes total sense. The 150 mil is probably like a bit large, in fairness, right? But it's Andreessen, like they got to throw 50 mil at something, and I'm sure Paradigm and Andreessen were fighting over it, and whoever threw the biggest check in won. So yeah, like it feels.
And if you make progress in this area, right? Like if you it's worth doing, and it's actually definitely more worth doing like 150 mil into like a Farcaster, like good team. They're gonna freaking
100%. They're gonna throw everything at it.
Do that,
and
rather than doing like this like light social, 5 mil here, 5 mil there. Like if you're gonna do it, you have to go.
You're not gonna beat social with like 10 mil.
No,
you're not going to invent a new social network with $10 million. In fairness, right? Like not today. And people get anchored to like, oh my god, 150 mil round, right? Like the Mag 7, like the scale that they're operating on, it's 2026. Like 150 mil for a startup is actually not that wild. It's kind of what you need in order to like redo some huge thing. It's the equivalent of like 10 mil in the early whatever teenage years of this century, or like honestly like 2 mil in like the early 2000s, right? Like just the scale of what things cost and inflation, etc., is going crazy. So I think my hot take is that I think we learned a lot about what worked, what didn't work. Anyone who is trying to build a new social network is going to have a lot of data to mine from Farcaster. So yeah, I think it's a bit unfortunate, but it was always, and this is venture, right? Like venture is like a 1 in 100 shot, 1 in 50 shot, right? For something to work. So yeah, it feels like it's fine.
I mean, I don't think this is gonna make or break Paradigm or Andreessen.
No,
I think they're gonna be okay, guys.
They're gonna be okay. They're gonna be okay.
I'm more focused on like the team and like, I don't know, like what did we learn? What did crypto learn? What did, what's the big takeaways on that front? The investors are gonna be fine. It was a valid bet. They went hard. There's like 5 years or something. So they really, they really tried. I mean, for me, it's just this takeaway that it's not. So 2 things. One is it is really hard. It's really hard to overcome the network effects. Yeah. Like it is really hard. And then 2, I think that like anytime your social is even potentially creating an echo chamber, it's like a non-starter.
Yeah.
And crypto is sort of similar in the sense like the apps and the products that sort of unlock more things and allow people to do more things tend to be just like infinitely more valuable than the things that like do one little itty bitty thing, right? And I've watched this. I've watched this a few cycles now, because everything moves so fast and people innovate so quickly, and it's very hard to keep up. If you're trying to like chase the current meta, like it's very, very hard to keep up. So I think
I think there is this like there's an interesting thing in like the early 2000s, right? Like 2007 to like 2012 or something like that, right? You had all of these apps, like once the App Store came out, you had these breakout apps that were able to like achieve virality, right? Because all of a sudden you had this platform where you could write an app and release it and it had massive distribution. I do think that we are in a place where something like a Farcaster built by like 2 people using AI or whatever instead of like 150 mil from Andreessen has the potential to go viral and actually build up some traction, not as a one shot, right? But as like there are 1,000 2-3 person teams that are trying this, and one of those things will take off, right? Like lowering the barriers to entry is the most efficient way to get better innovation, right? If it costs $150 million every single time we try to reinvent social, we're going to do it like 3 times and be like, we don't have any more money left, right? Maybe not Andreessen, but like, they're probably not going to put 150 mil into a social network next week, right? But if for $200, 3 people in a garage can like cook a new social network and just like release it, through some distribution platform, and the costs of building an app go down to like $100, we're going to see some wild shit, is my prediction. And like I think that's the biggest takeaway for me with like the cost of engineering collapsing to almost zero, especially for proof of concept. Like fine, like whoever builds that thing, if they get to 10,000 users, they're going to have a bad day.
They have to rebuild the whole thing.
You're going to have to rebuild the whole thing. But you know what? Rebuilding things completely is actually fine these days. Yeah. You can just rebuild stuff from scratch and it's fine. So yeah, I think we still have some work to do on social, and I think that that we're going to see more people try and kind of innovate here. Like micro social networks.
It has to be new. It has to be just like actually different. Because the second you're trying to compete with Twitter, then it's like, oh, you're Twitter for this niche audience.
Niche thing, yeah, exactly.
And then it's like, again, you're going back to, you're going to create this echo chamber. You're always competing. The network effects are always going to be working against you.
I mean, you guys have this on Abstract, right? Like you guys have this nascent social layer, right? Like what's your takeaway?
I have a culminating thought here. My culminating thought is, I think one of the greatest things about tokenization is the ability to take intangible things and make them tangible. And if you assess the opportunity there, what is one of the most valuable intangible things that, if tangible, could be an absolutely huge market? My answer is influence. And influence is derived from a social network. And so I very much think this is a $1 trillion swing. Whoever does figure it out, I think is going to have one of the biggest businesses in crypto.
if you were to tell me, you know, Instagram was built on Python, if Instagram had a token and Python had a token, which one would be more valuable? I think Instagram 100 times out of 100.
Yeah.
And I think there's something really big here that only crypto can enable. And so, like, to the point on the abstract side, you know, one little thing that we implemented, and like Stake ended up copying us, you know, obviously because they have such a huge distribution layer, but like being able to tip somebody seamlessly on stream and that money goes directly to them, right? Was like pretty an interesting little use case. Had never been done before, but it like felt really good. Right, this idea that I can just have a wallet. I see a streamer, and instead of sending them a gift that goes through TikTok and they take their fees, and there's a payout of like 7 to 14 days. The idea that I can seamlessly transact, and that was like what might feel like a menial feature. It probably is, but like has probably huge ramifications for, you know, how.
But this is like the entire fucking point of crypto.
Yeah,
dude. Like be able to peer-to-peer electronic cash.
Yeah,
like.
Yeah,
you should be able to pay someone that you see online directly without it going through like 15 middlemen. The fact that you guys invented that tech for this
is absurd.
Is absurd. Like, how is it 2026? Or I guess you did it like a year ago, whatever. But like, how did it take us that long? Like,
because everyone wants their cut.
You still can't even like the thing that we've been looking at Infinex is like, how do we send people money to their X account?
Yeah.
Right? Like you can't I can't just send you money. Like I see a good tweet, like I should be able to send you money, right? Like now, you know, talking about monetization and you know, whatever, right?
I wanted to do, you'll appreciate this, but because you can kind of like index on session keys, what I wanted to do is I wanted an actual social feed. Saigar ended up nuking it. But I wanted there to be like, because right now, if you upvote something on the portal, it's a transaction. So I was like, what if every like you gave them a penny, right? Or like every like was like 5 cents. And so like, you can do that, like no pop-ups, no anything, like click like 5 cents out of your wallet, 5 cents out of your wallet. There's actually like social on crypto rails. There will be a monster company.
I agree. It's just we need to.
But you need a beast. And the crazy part, and like why it was A16Z. Like you can underwrite Dan, and then that thesis and that potential. Like that's I've seen A16Z blow a lot more money, on a lot more dumber things. Like that was a worthwhile swing.
100% agree. Yeah. Agree. And again, like a lot of empirical data. Like we saw what didn't work about that. Like, you know, Infinex did a ton of stuff on Farcaster in the early days. And one of the best things about Farcaster is that you had a very, very efficient filter for more technical people, right?
Yeah.
Like the people who were on Farcaster were not the like dregs of humanity that you would get on X. And so you filtered out a lot of that. Like, and it did shift over time, and there were people who kind of came in, but like people were mainly there for the tech, which was amazing because you had this audience of like people who were in it for the tech that you could, you know, speak to very quickly and tap into. But, you know, there's a bunch of other stuff, right? Like you get one thing right out of 10 things and you need it to be 9 out of 10, and it just doesn't work. It's a hard game.
Yeah. And by the way, we loved it too. Like we absolutely loved it because we have the primary MetaMask account, which is like massive and like it's right. And then we have a whole bunch of other MetaMask accounts that are for like actually having conversations with people, like actually engaging on a deeper level. And then we all have our personal accounts as well. But yeah, early days, not even early days, years of Farcaster, it was like, we can operate as the primary brand, we can represent, but we can actually connect on the deeper level with people that are actually like our users. And like both our lovers and our haters, right? But on like this deeper level, like when we
would like lower noise. Like lower noise,
people would
like
actually
more higher
engage.
Signal. Yeah, agreed.
Because if you can go look, like if MetaMask posts something on Twitter, you're gonna have 50 slop replies. Okay, that are just like
50, no, like 5,000, right?
Like completely meaningless. You're gonna have like 20 fake support bots, and then you're gonna have like 10 or so like people that are just like violently angry at you for no reason whatsoever, and then like 2 that are like, "We love you, one token," and then Zero. Today, there are literally 0 people that are engaging, like, actually with the content.
With the tech. Like, oh, like this is
yeah,
cool tech.
or
Like, how are you thinking about this thing? There's no conversation.
It used to be even when
I know,
had,
it
like,
used to be. Yeah, I know.
People would comment on the actual thing. You could engage. You could get feedback. Also, it also used to be that, like, people would come to the most recent tweet and be like, my stuff's broken, help me.
Yeah.
That's gone too. The only people that do that are the bots that then reply to themselves.
Yeah.
Look, but if it costs you 5 cents to reply, I bet you all that stuff would disappear tomorrow. Right?
I don't know. I don't know though,
so.
because like that's the problem. Like that's what Tay was saying with email, right? Like, you know, there was a thing where people were like, oh, let's charge people to email, right? And it creates this very perverse incentive where a person who has no financial incentive to like something or a tweet or write a post will stop writing posts if it costs them money, right? Like we forget sometimes in crypto that like most people are not willing to spend, like, you know, I mean, this is like even something with like vibe coding, right? Like, you know, the cost of running a machine overnight is like, you know, maybe 20, 30, 40, 50 bucks. 50 bucks a day is a lot of money for people, for most people, right? Like if you're just churning through $50 to $100 a day in like credit in tokens, right? Through Anthropic's API, most people can't sustain that. It's like a job, right? So, you know, we do forget sometimes that like charging people to do things, you filter out a huge group of people. Now, maybe that's okay sometimes. But scammers are going to pay 5 cents if the ROI is 6 cents. Scammers are going to pay 5 cents if the ROI is 5.000000001 cent. Because it's positive EV. Like, just fucking pay the money, do the thing. That's the challenge, right? It's like they do the math.
They do the math.
Of course they do. That's their job. Their job is do the math, right? And like that's literally their job. So,
wait, hold on. I want to skip forward because this is like relevant. So there's like this news that came out that was like Ethereum activity is spiking, blah blah blah. And then and then this other guy came out and was like, it's actually all the address poisoners. And then I got a little heated with him because I didn't like his takes. But basically, for those that don't know, address poisoning is those spam transactions that you get on chain. And so they show up like sometimes they'll show up in your wallet, they'll show up in Etherscan. If you send a transaction, you'll get like bombarded by like incoming or outgoing transactions that have like lookalike addresses. The reason they do this is because they're hoping that you will copy, like you sent to your friend or you sent to your other address or whatever it is. And they're hoping the next time you go to send, you'll accidentally copy the wrong address and then send your money to the address poisoner, the scammer. This is like, it goes on for years. It's been on BSC and Tron and ETH. There's even some ones on Bitcoin, which to me makes no sense because Bitcoin's like UTXO and you use new addresses all the time, but like they do exist. I've seen them. And they have like really interesting mechanisms and ways that they evolve both to make sure that they get into UIs because so many UIs are trying to block them. But also they're very willing to spend money. So there's like these one guys that were doing calculations based on the balance, based on the activity.
They made what, 50 mil? Was like the biggest one? 50 mil, right? Yeah. So how, like, you can spend 50 mil worth of transactions is
a lot of transactions.
A lot of transactions.
A lot of
fucking transactions.
It's pretty crazy. I won't go into details, but we actually, and it wasn't that much. It was a meaningful amount, but it wasn't like that much. But we got hit by a super pro. A super pro. We ended up tracking him. The guy had ended up making like $200 million on people. Wow. But it was actually a venture investor who was investing in us, who sent the money to us. He ended up just like, you know, insurance, taking the L and then sending us and actually funding. He lost like $1 million. Basically a pro got in between. It was like a middleman, and it was really sophisticated.
Yeah, dude, it's wild.
That's why never do test transactions. I tweeted this the other day. Never do test transactions.
I
If you don't
know.
do a test
Kain-
transaction.
Kane's just moving $20 million, no test, just boom, boom, boom. You got some balls, dude. I could.
That's how you
it
burn
is
$10 million
true.
of the die as well, right? So just,
Technically, it's true because the second you do the test transaction, you will get
that's what
bombarded by like 30.
That's what they're targeting.
Okay.
They're targeting the test transaction.
So now that's how you lose your money too, though, just in a different way. The solution is use an address book, label your addresses, get an ENS name.
Yeah.
Like do that. And never, guys, never copy from your transaction history. Like MetaMask, we don't show you your transaction history like that. So it's not even an issue.
Yeah. Do not use that as just don't use it. If you're going to do it, if you're going to do a transaction and you're going to do a test transaction, put the address that you're testing into a place that you trust on your machine or whatever, like a scratch pad or something like an iOS node or whatever. Copy that, do the test transaction. If the counterparty confirms that they have the funds and that is an important step, not just that they saw it on a block explorer, but that they actually confirm it, then go back and copy it and do the
from the same place. From the same place.
Not from MetaMask, not from Etherscan, not from SolScan or whatever. Like go back to your scratch pad, copy the same address. Yes, exactly. Yeah.
But yeah, so I just found it when I was investigating these, the ones that really threw me for a loop was I was like moving some big money around. They were sending me $10 USDT.
Totally. Yeah.
I was like, yo, there's no way this is profitable.
It's crazy. I know, right? It's profitable.
Well, turns out it's profitable. And so when I that was really a wake up moment for me because I was like, if they're willing to spend $10 to send a transaction.
They were getting filtered out. Right, like the filter was like sub $1, and then they went over $1, and then I think Etherscan started filtering out like low value transactions and starting to like triangulate it, and
exactly.
So they're like,
so
all right, fuck it, $10 per transaction, but it also it has to be based on the address value, et cetera, et cetera. Like they're obviously thinking this, but it goes back to the point. They're doing the numbers.
They're doing the
numbers and they're going, okay, this address has $50,000 in it, sending them $10. If there's a 1 in 1,000 chance that they make a mistake and send me the 50 grand, it's worth it.
Yeah. It's wild numbers. And like ever since then, when I think about like, payments for social or payments for anything, right? These micro payments, I always just go back to that. And I think that ultimately my conclusion is that you cannot successfully block out like threat actors, scammers, spammers, whatever. You just can't with financial stuff. There has to be other stuff. And the second you do try to block out them with financial means, you actually just destroy every legitimate user because there's no legitimate user on earth who's just going to send $10 randomly around because there's no reason to, right? The only ones that do that are the spammers. And so then you've just built a platform for spammers. And so then the question obviously is like, okay, so then how the hell
but this is also I would argue a function of like transparent ledgers, right? If someone can see you doing a test transaction, especially like
from your
let's say you do, let's say your safe has 100 grand in it, right? And you have 10 different assets that are all $10,000 or whatever, right? And you go, okay, USDT, $1 transaction, classic test transaction, $1 USDT transaction. The follow-up's probably going to be 9,999, right? And they can see that. So, one of the things is like not having a transparent ledger, using some kind of zero knowledge moon math tech so that they can't see you do the transaction, right? You do the test transaction and anyway. All right.
I also
sorry, but
hold on.
Okay.
If you're using an interface, Kain, I don't know what wallet you're using, but like when you're using one, if it's showing you,
obviously.
If it shows you, like if you send a big transaction out or a little one or whatever with a balance and you're seeing the spam transactions, and especially if then there's a little copy button, then like that interface is basically is like giving free real estate to scammers.
Yeah.
And there's a ton of ways that you can like change things without playing whack-a-mole.
Yeah.
Etherscan, the block explorers are in a bit of a different position because like their whole job is to show the
They
whole
have
ledger.
to show you everything. Exactly. They can't start filtering stuff out without it getting bad.
Yeah. But for a wallet, do users want to see every single transaction that comes in their wallet? No. Do they want to see every single scam token? No.
So there's a funny story about this. When we built Infinex, the way that we built it, it was retarded. And we ended up in a situation where we know about deposits, but we can't actually filter them. And so we don't have like proper deposit detection where we show you the deposit. So we just don't show it to you. So you actually can't do this inside of Infinex because we don't have the technology to show deposits into your wallet.
I mean, that's, by the way, that's MetaMask as well, is like, we show you the activity from your internal state logs,
but not in,
we never scaled up the infrastructure to show everyone's transaction history all the time for every token on all the chains.
It would be impossible. It would be impossible.
And as a result, we have like literally zero address poisoning victims ever. It's fantastic.
Yeah, I know, right? It's so it turns out, where did we land? Is Ethereum, is it all spam? Like, are we?
It's definitely all spam, dude. Finger to the wind. Come on.
Yeah. Okay. All right.
I mean, I don't know.
So from chains with too much activity to chains with no activity, Cosmos is losing builders. Cosmos to me feels like it's in the horrible, uncanny valley, trough of despair of being like just real enough, but not used enough that like it's hated by everyone. Like XRP, it's like it doesn't do anything. Like it's like it does things now, right? But like realistically, no one uses it, no one cares. It's a meme, right? The chain is a meme. There are many chains where it doesn't matter whether, like Cardano, it doesn't matter whether it does anything. Like Japanese grandmothers are still buying it for reasons, right? Because the chain's a meme. Cosmos is in this weird position where like it is actually usable. You can do stuff with it. You can build, these sub chains on Cosmos, and yet it's like just doesn't work. It's just like
they've just never. I don't know. They just never
chain on AVAX
figured it out.
Yeah. It's and so people are like, okay, I mean, we saw this with DYDX, right? Like that to me 2 years ago, whenever it was like the nail in the coffin, right? Of like, okay, DYDX went there and it just like activity fell off a cliff. And that was coming from Starknet, which was already grim in terms of like, how do you get to it? And like, the bridging and stuff, like, especially back in the day. Now it's a lot better, but like back in the day, it was really hard to get onto Starknet, right? I mean, even like Starkware, right? Like the original version, like bridging was hard. It was super clunky, needed a different wallet, etc. And then DYDX went to Cosmos and it got way worse. It was crazy. So yeah, I think, it seems like the incentive is for a lot of these builders who are building subnets to now build EVM L1s or L2s. And, this has been, I think, something that has been going on for a while. But just, like the EVM interop and all of the tooling and like infrastructure that you have access to, it's just so hard to kind of like build a chain somewhere else. It feels like a massive uphill battle. Even when you're doing ZK stuff, like there's obviously challenges with ZK Sync that you guys have dealt with. I'm sure, Luca, but like you still get so much of the EVM.
Yeah, it's still
benefits,
like
right?
EVM.
Like it's hard EVM, but it's still EVM. So you get a bunch of things, right? Like,
look, I'm stoked we picked the ZK stack though, because I think that's where it's now clearly like has its own little bullish thing. It's like, I am stoked we picked it. We did have some troubles, right? Like there was a couple things, it's almost like 1-to-1 though. It wasn't like EVM equivalent at one point. Like when we first did it, it was like a huge pain in the ass.
Yeah.
But now it's like they're on par, and now they're actually like they've gone from like behind in terms of like usability to like on par, and now obviously because it's on the ZK stack, there's a slew of things that we can do that others can't. So I'm actually pretty stoked. I'm really glad we made that decision in hindsight. For the longest, I thought that we made a mistake because there was, more resources, more money, more integrations with other people.
Friction and like you're segmented and fragmented and all that stuff. Yeah.
And I still feel like Cosmos is so much worse in terms of the segmentation. Like it's just like a whole different mental model,
It's
whole
so
different
hard.
culture. The dev is all different. And I don't know, it's just, the tech is good though. Like the
tech is good. It's funny. I remember Tarun said to me like 4 or 5 years ago, he's like, the best chain is Near. He's like, best chain, best tech. And like the more I've looked into the Near ecosystem, the more I'm like, actually, I think like he was right. Like it is the best tech, but it's so hard to be your own virtual machine living on an island and trying to attract people there. It's like really, really hard.
And at this point, I think before we were like spinning up these L2s and these L1s to spin them up, and like the tech arguments held like some amount of water. At this point, I think we're probably past that stage. Like the applications, the existing user base, the existing infrastructure, the switching costs, like all of that adds up. I do not want another freaking wallet. I have so many wallets. I've played with so many chains. I don't want to keep track of another address. I don't want to remember another block explorer. And ultimately, I think increasingly so, people are just like if you're this little app on this random chain, you really have to do work.
A new wallet, like, and even like for us, we've integrated a bunch of different chains. We've integrated SVM, EVM, a bunch of L2s. We got stuck on the ZK Sync stuff, and we haven't circled. Like, we got to a point where we're like, this is really hard. We didn't do it, and then now it would be easy, but we haven't circled back around to it. But we've done like Sui, we've done some random chains. We need to circle back to abstract. It's high on my list.
Do it.
But, sorry guys, I gotta jump. I'm sorry.
Okay, cool. All right, easy.
Bye,
I think we've
Luca.
only got one more topic. We'll see you next week. But yeah, so the last one is Paradex. So Paradex rolled back their chain. I get chain, app chain, app
chain,
something. Their app chain. I mean, this is another one of those ones where like very obviously beneficial for the majority of users, I think, right? It was like so bad and so painful for almost everyone involved, right? That it's really hard to sell like, code is law on this one, right? Like, it was
I don't know what people were expecting.
I don't know if database migrations ever fit into the code is law like belief, but I think once it's a database, you kind of go, if you need a database and you fuck up your database migration, then that's probably rollbackable, I guess.
And by the way, they didn't just like, the impact was that somehow the database migration resulted in Bitcoin going to zero.
It's wild. I know.
Which is like, right? I thought, 1010 was bad with some of the ones that went to zero, but Bitcoin didn't go to zero.
Bitcoin held above zero, thankfully.
So I don't know.
So it feels okay. It feels like it, better to. There was a period of time, I think, where if you did any kind of rollback, even if it was net beneficial to most of the participants, right, that people would be like, this is now a scam and I'll never use it again, right? Yeah. I think the meta has shifted a little bit to the point where it's like, if a mistake is made, even by the team, that impacts everyone and they don't attempt to fix it, then I will never use this thing again.
Yeah. And
like, that's real. It's the big shift.
And the thing is that, so I always just go back to this, like, if you can't, like, Bitcoin can't roll back. Like, it's just not a thing that can happen, right? But if you can, and you choose not to, and you do all these mental gymnastics to, like, basically morally justify you not taking an obviously good action, I'm sorry, like, you're avoidant, you're not good at building, you're not good at shipping, you're never going to deliver value to people, because, like, it's just such a unique case. And I think that anyone that, again, assuming that you can, right? Assuming that there's like a case where you can do something that, like, fixes it, and choosing not to, and especially choosing not to for philosophical reasons, like code is law, it's like the biggest red flag for me today. The biggest
there was a period of time where
people,
like the consensus was code is law, and if you do something like this,
it was insane.
A thing. We all, not all of us, most of us believed it, right? But you know, the funniest part about it, I think it's worth unpicking this as like a final point, right? It was like, philosophically, code is law. Pragmatically, I would prefer code to not be law because I need to build stuff. And so I kind of need some like proxy contracts and like non-immutable stuff in there. Maybe throw a database in, whatever. Like, that's pragmatically what I need to build, but it's not what I believe. It's how I live. But what I believe is this other magical system over here. And so when anything went wrong, it was like, no, the magical system is what rules us, not the actual reality on the ground.
But again, that's avoidant, and you're just basically like
fun.
making
It was a fun way of living for a period of time that we all.
I still stand by the fact that, like, people who actually go hard and get it right and ship stuff that's like immutable or nearly immutable and actually decentralized, like, that's the biggest green flag for me. But the reality is like 99% of the stuff is somewhere between a vibe coded database and like a multi-sig, and in all of those cases there's going to be opportunities to fix things, and if you can, you should. There's like there's a few situations where like it gets kind of gray because the impact, you can end up having like adverse impact or unintended consequences on other things with the action. That's like, those are interesting conversations to have, and like, where are your values and stuff, but it's so rare. Honestly, it's so rare. Like,
it is rare.
It's usually like, do you want to help the people or not? And there are a huge amount of people who go, we can totally fix this, and it has like very little risk to basically anyone, but we're not going to. And I just say, I just look at you and I'm sorry, like, you're never going to build and ship anything of value if you're that disconnected from like your people and your product.
Yeah, the actual reality on the ground. I think, you know, like there was a period of time where tooling was so bad, and I think it's gotten a little bit better, but there are some like very fundamental challenges, right? Like, if you are going to build, and Uniswap's a great example of this, right? You need V1, V2, V3, V4. Every single time it's a new factory contract that is immutable, you need to, there's still fucking liquidity. I found liquidity in a Uniswap V1 pool the other day.
Yeah.
I was playing around with something. I had a wallet and I was like, oh, that's weird. Because there were no LP tokens back then, right? Like, it's just a magical position in the contract, right?
Yeah, and it doesn't show up anywhere.
It doesn't show up anywhere. And I was like, that's a weird transaction. What was that about? And then like I still had value in there. So there's like that's really hard. Like you still fragmenting. And
it's still there, by the way. Like, it never got
still there. I mean, but that's the nice thing is like it is immutable. It didn't get hacked, so it's still there. So that's good, right? But every single time you have a new version, which in fairness for Uniswap's like every 2 years, you need to drag liquidity across. It's like it's an attack vector for your competitors to try and like drive a wedge. Like it is challenging. We don't have good automated systems. You know, it'd be amazing if like there was a really easy way to go, okay, everyone like opt in to like migrating and, you know, move to V4 and we'll make it super easy for you. But we never really built that technology. So I don't know.
And most of the time, I would recommend teams avoid it because it adds just another layer of complexity. And like, we just haven't gotten to the point where Uniswap is a really rare case where they build things in a way and then they go to town on like the security of it from day one and then forever after, and then they ship it. Most things don't. And as we've seen in the last like 6 months, we've had a lot of old things get hacked.
Yeah, it's crazy.
A lot of them. And a lot of them were sort of assumed to be secure and probably like were secure.
Multiple audits, they were secure at some point because they had, in some cases, billions of dollars. Like most of the time, they've got a long tail. Like there is this decay function where like it goes from $1 billion of TVL to 100 million to 10 million to 1 million. Then it's like 1 million. The long tail of things, is it worth going after? And it's like, well, no, it wasn't. But
it wasn't. But now it is. Now it is. Yeah. And there's been a lot of them. And then I think just like the security posture and like knowledge has improved on like the auditing and the builder side, but also there's just this thing, I think, I don't know if it's AI specifically that's helping out, but I think the tooling and like the tooling and the knowledge and maybe the AI, they're able to like hold things in their head and put together much more complex so like attack flows that probably with like way less effort.
Yeah. No, it's actually crazy. Like you can like one of the things that I do a lot is you can build sub agents, right? That are like fine tuned on the training. They cut out a lot of context and they just are like, and you can tell them like you are like an autistic code auditor. Your only job is like audit code, and it won't get distracted with anything. It'll just go in and like understand like the like fine details of things. And
it's
like,
wild.
It's wild. It is wild. All right. We'll wrap it up there. That's it for this episode of Uneasy Money. Thank you for tuning in. If you like the episode, follow us on the Unchained feed on X. We haven't been kicked off there yet, thankfully. YouTube or wherever you get your podcasts. And we'll see you next week.
Awesome.